So, good morning, colleagues. Good morning, friends. Welcome back to the second day of the conference that we have. And it has been a great pleasure to have you here. As you know, we wanted to discuss in this particular workshop and explore practical solutions for consolidating subnational governments and state-owned enterprises into the whole of the government reporting. So in that respect, yesterday we talked about why consolidation matters. We discussed the practical aspects and trade-offs on this. We also discussed budget reporting and financial statements aggregation versus consolidation. And we also looked at the technical work towards the end of the day on the pulse assessment. So today, we are particularly going to talk about the landscape that needs to be in place if we are talking about consolidation of subnational governments. So landscape of accounting government. So we are focusing on subnational governments here. So we are looking at, do we need to have the same accounting standards at all levels of the government? What about the IT systems? What about legislation to begin with, for example? What about staffing, training? So in that respect, we have Andreas here, whom you all know. Professor would be telling us more on the landscape of the accounting frameworks, and we would understand more on the IPSAS aspects of it from Ross. And then Ukraine and Albania have done substantial work on consolidating the subnational accounts, and we will hear from them what they are doing. And then we will open it up for questions and take it on from there and see how we can all benefit from this session. So with this, Andreas, would you come and start your presentation? So, okay.
Not ready. Okay. Well, I'll briefly say hello then. First, perhaps it's a great pleasure being here amongst friends. So thank you very much for having me, and I'm really looking forward to a fruitful discussion. I think it is a very important topic we are talking about in most of your countries. This is one of the things which is on consideration. In some countries they have advanced a bit more, whereas others may be a bit less. So in that sense, I think it's really something we can take advantage of in this session. So wonderful. So thank you so much for putting up the slides. So as Arun has mentioned, we're talking about the landscape, basically. We're talking about accounting frameworks for subnational governments. And I think this is the main topic of this session. Now, I think we have to be mindful that actually most accounting frameworks are what I call purpose-built. So they are built for a certain purpose. And I think sometimes we're trying to push them into a different purpose, and that does not end well because they were built for something else. And I think that's one of the key messages. So if we look at the frameworks which are in existence at the international level, we have, of course, IPSAS, and Ross will talk more about IPSAS just in a short while. Now, IPSAS is an entity reporting standard, so it talks about an accounting and a reporting entity, and basically it requires to consolidate what is economically controlled by this entity. So this is the leading principle for IPSAS. So you want to see the entire picture of one entity. Meanwhile, if we look at the statistical side at GFSM, they have a very different concept. They have a concept of economic sectors, not of entities. So you do not look at an entity, at the reporting entity, but you look at an economic sector which consists of various and usually numerous institutional entities. So that's really a very different perspective, and obviously the result is very different in terms of consolidation, because GFS requires you to consolidate all those institutional entities which are within a defined sector, which can be, for instance, the public sector, as we will see later on. Now, if we look at the national level, actually, we do have national regulation in all the countries. I mean, we have IPSASB in Ukraine, we have IPSASB in Tajikistan, we have, of course, national standards in most of your countries, and you usually also have some sort of regulation for statistics. So I mean, most countries have their own standards being set. They are, of course, based on the international frameworks I just talked about, on IPSAS for accounting and on GFS, FSM for statistics. But they are usually aiming at harmonizing the accounting policies, and that's very important of all those entities, because otherwise you will struggle, regardless whether you're doing an IPSAS financial statement or GFS, because if your accounting policies are not harmonized, you will also have difficulties with statistics. So it's not helpful by any means. So usually the strong focus of those national standards is to harmonize the accounting policies between all the different entities in the public sector of that nation. Then the consolidation procedures. I heard you talked yesterday already about consolidation versus aggregation. Basically, all those frameworks do the same. They ask for consolidation, i.e. they ask for elimination of any mutual transactions, because otherwise you have double accounting. No? So that's not good, and that should be avoided by both frameworks. And then, of course, you do have, well, the perimeter, and the perimeter is, of course, very different, because depending on your constitution, most likely you're not controlling the subnational governments. Well, in some countries you might control them, but in many you will not control them, because they're autonomous, they are federal. Even if we talk about Bosnia and Herzegovina, for instance, you have a federal concept, so they are not controlled by the central government. And therefore you have a different parameter, whereas GFSM talks about economic sectors, usually about the general government sector, and then of course you include all entities even if they are not controlled. So this gives us this picture, and you've seen this picture, and it comes from the publication we did a while ago for PULSAR 1. And of course you can see, if we talk about the public sector, we talk about the general government sector, so all levels of government plus all public corporations, so the state and also the local public corporations, they are in the public sector, so that's the orange boundary, whereas the red boundary is what comes out for IPSAS. That's only the controlled entities, which of course include usually just one level of government and then also some entities. Now, let's make some country examples. I take 4 countries, that's Colombia, New Zealand, Switzerland, and the United Kingdom. And as you can see, I mean, all of them, they produce IPSAS-based consolidated financial statements. So 4 times yes, but it's a different thing. In Colombia, in New Zealand, and in Switzerland, the IPSAS-based financial statements are consolidating just the national government and the national state-owned enterprises, not the local government. Whereas in the UK, yes, they do consolidate the local government. Why is that? Because UK is a unitarian country. They don't have autonomy of the local government, and therefore the local government is controlled, and they apply control principle and therefore consolidate local government. Whereas the other 3 examples have autonomy of local government, and therefore they do not control them and can also not consolidate them based on IPSAS. The question is, well, do they also produce consolidated financial statements for the public sector? That's the second column. And there the answer is only interesting in the case of Colombia, because Colombia is also a decentralized country. Their departments and local governments are autonomous. They are not controlled, very clearly not, but they do produce, and that's, I think, the interesting case of Colombia, they do produce a consolidated financial statement for the public sector. Why? Well, because they have a national law which says you also have to produce a consolidated financial statement for the public sector. You have to do one for the national government, that's based on IPSAS, and you have to do another one for the public sector that's not based on IPSAS, that's because of the national legal requirement. Whereas Switzerland, New Zealand doesn't do so because they don't have any control and they also don't have any legal requirement to do so. And as I mentioned, the UK does already based on the control criteria. Of course, they all produce financial statistics for the general government sector. That's a very common requirement, so no surprise there. And they all, and none of them actually, except the UK, which you can see there, is actually producing for the public sector. That's because the IMF has historically put more emphasis on the general government sector than on the public sector, but recently also increased the idea of having public sector financial statistics. So what is the regulatory framework? As I said, it's in all basically cases, it's somehow related to IPSAS. So Colombia is indirect on IPSAS. They have national standards, very, very much like most of you here in the room. They apply to all levels of government with very limited exceptions. And they do have, a harmonization of accounting policies. It's not totally identical, but they have a strong harmonization of accounting policies. New Zealand has an indirect adoption as well, but they don't have harmonized accounting policies, which makes it difficult, of course, to do any consolidation. If they were to do so, they have also different tiers. So actually not all levels of government apply the same. The full IPSAS are only applied by the national government, plus the very large cities like Auckland, and all the others are doing some sort of reduced requirements. And Switzerland, well, at state and local, national level, they use IPSAS directly, so full IPSAS, whereas at state and local level, it's an indirect adoption, which is clearly different from the national level, so it would be difficult to consolidate. In the UK, it's IFRS, and it's a national standard, it's uniform, and therefore it is the same, which of course helps consolidation, as we have seen, of the whole of government. Now, and this is my final remark already, you would think, well, the UK is the perfect example. There is a bit of a sobering message on this slide, because really, if you look at the UK, well, they do produce IFRS or IPSAS-based statements based on control, but it takes them 16 months. It used to take them even 3 or 4 years historically. So they are actually proud to produce them within 16 months. So 16 months means the 2024 statements, they come out later in 2025 and are, of course, not used by anyone because they say, well, that's a very historical exercise you're doing here. We have moved ahead. It's totally different the situation. So it's not really useful. Why is that the case? Well, the problem is in the UK, we are not really sure if control really exists because the local governments, they often do not deliver the financial statements on time. They often do not deliver them completely. They often do not deliver them with a clean audit opinion. So it's really a mess. And this, of course, raises the question whether they really have control because they cannot actually force them to produce high-quality financial statements, and therefore it's a messy consolidation. And that's why it takes them 16 months. So, meanwhile, in Colombia actually has no IPSAS consolidation, as I mentioned. It's based on a national law, but that helps them actually to force the local governments also to deliver on time. It's not 100%, but yes, it's really very complete. It's usually with a clean audit opinion, and therefore it really works, that they can produce them within 5 months, as we can see. So it's really useful, and it's also in compliance with IPSAS 1, which requires within 6 months. So it's within 5 months even. Although I just repeat, it's for the public sector not based on IPSAS, it's based on a national legislation requirement. So conclusions, yes, usually IPSAS is leading to a consolidation which is only partial because of control, which is not applying to all local government entities or to none perhaps. GFS is perhaps more complete of the statistical sector, but it's a statistical sector and not control. There is actually a good practice to prepare public sector consolidated financial statements. So we do have examples of countries which are doing it. But of course, this requires a uniform accounting policy and line-by-line consolidation with eliminations, as you have seen yesterday. So thank you very much, and I'm looking forward to hear the other presentations and then the discussion. Thank you.
So welcome back, everybody. I have the benefit today of speaking after Andreas, who's already explained a lot of the key principles of IPSAS, and we spent a lot of time yesterday speaking about various concepts in IPSAS and country examples. So my presentation today, when it comes up, what I want to focus on today are a couple key areas of the principles in IPSAS that kind of continue to come up as questions, and particularly as they relate to subnational governments. And there were some great questions yesterday that I'll try and address as I go through my few slides. But you will start to feel a little bit of repetition, so you know, bear with me on this, but I think it is important to continue to go through the concepts and make sure that from a principle perspective that it's understood what consolidation means when you're talking about IPSAS. So in thinking about consolidation at the subnational level, I think Andreas's presentation really sets the scene quite well. And this was a point that was emphasized several times in Andreas's presentation and in the various presentations yesterday. When you look at IPSAS and you're talking about consolidation, the guidance itself doesn't speak to different levels of government, such as the federal or national level, subnational, local levels. The consolidation principles in IPSAS always are focusing on the degree of control and influence you have over the other entity and whether you exercise control. And then when you do, what the accounting outcome is. And in consolidation perspective, that's line by line consolidation that Andreas just laid out very well, and elimination of intercompany balances and transactions to get a single set of financial statements. So when that can exist at several levels in a government entity. So you can choose to have sub-consolidations as part of a total consolidation. The key is the economic entity that you're consolidating is the entities that you control as a single picture and eliminations. So again, this question came up yesterday after the session. Someone asked me, what does IPSAS say around consolidation for subnational governments? And the principles themselves don't speak to that. They speak to the control principle. So it really comes back, as Andreas's examples just showed very clearly, on the structure of the government and the degree of control at each level of government. So whether the federal level controls the subnational level, and at the subnational level, the entities that are controlled by those entities. So you really do have to look at the laws, regulations, and constitution of how your government's formed to determine whether that subnational government is consolidated into a higher level of government or not, or whether the subnational government controls other entities that it must consolidate. And it is really important to highlight that there's significant flexibility in applying those principles, but you must apply judgment to the facts and circumstances to the particular situation to ensure you get the appropriate accounting outcome. And I thought Andreas' example on Colombia in particular was a great example of that, with the law in Colombia that sets out what consolidation is, regardless of the principles, you must follow the law and provide the consolidation in the appropriate manner. So when I put this slide up, you might be feeling a little bit of a sense of deja vu, because this is a slide that I did use yesterday. But again, I really want to highlight a couple of points that I talked about yesterday, and then I want to relate those points to subnational governments. So when you're looking at consolidation and control in the IPSAS standards, there are a suite of standards that tell you how to account for guidance across the public sector as it relates to control and the degree of influence the controlling entity has over the controlled entity or the influenced entity. And I won't go through all the points in detail again today, as I did yesterday, but one of the interesting points I found from some of the presentations yesterday is we seem to be having a discussion about consolidate or not. But if you are in the or not consolidate, there are different levels of influence and different standards you must apply to appropriately reflect your interest in the other entity. And that exists at the subnational level in the same way it would at a higher level of government. And in some cases, you may have a subnational government that's consolidated into the higher level of government, and you would still have to apply these principles at the subnational level to prepare the appropriate sub-consolidation, especially if that subnational government also wanted to present its own financial statements of the entities it controls. That's very much a decision that would be taken by the controlling entity and the information being provided to users. But I think it's quite important to understand the different accounting requirements within IPSAS and the different levels of control and how those are reflected appropriately through the accounting methodology. So we discussed this in quite a bit of detail yesterday, and I just wanted to reiterate that when you're thinking about consolidation and you're thinking about subnational governments, the principles are the same. It's how you apply them and how you're looking at the economic entity that you need to consider. And I'm going to take us through a couple of examples to kind of illustrate in a fairly simple manner how that would work in a public sector perspective. So the first example I'd like to take you through is, it's a fairly simple structure. I know you're all dealing with probably much more complex structure to this, but this is where you've got a national government that controls the state governments underneath it, and the state governments control the departments, local governments, and in some cases, state-owned enterprises below them. So this example would be a similar example to the unitary government that Andreas just talked about, the UK, for example, where the national government fully controls the lower levels of government, and those lower levels of government control other entities underneath them. From an IPSAS accounting perspective, when you have that control at all levels of government, the ultimate controlling entity is the national government. And in IPSAS, it talks about you're reporting in a single set of financial statements for the economic entity or reporting entity in one set of accounts. So in this situation, this government would consolidate all of the entities that it controls below it, present that in a single set of financial statements. Again, doing the things that Andreas talked about, we talked about yesterday. So harmonizing materially different accounting policies, providing intercompany eliminations for intercompany balances and transactions, and presenting the financial statements in a single consolidated financial statement view of the entity. And in another situation, you've got a national government that doesn't control the state governments below it, but those state governments do control departments, local governments, state-owned enterprises. And again, this is quite a simplified example. So the national government probably does have departments and things that it discloses underneath, but for illustrative purposes, I've tried to keep it relatively simple. So an example of a country that would be similar to this in terms of who controls who would be Canada, for example, that I spoke about yesterday, where you've got what it calls senior governments, and they have different responsibilities and legislated areas it controls and doesn't control. And the federal government, the national government of Canada, applying IPSAS, wouldn't control any of the provincial governments that sit below that. But the provincial governments do consolidate their own entities as well as local governments, as they're controlled by the provincial governments. So in this case, if you're applying the IPSAS standards, again, you have one economic entity at the national level that would prepare consolidated financial statements for all of the entities it controls. And then each state government has its own economic entity and including all of its controlled entities where they would do a full consolidation of all controlled entities. So in this case, this state government's consolidating the department and another local government. And then the other state government also consolidates its department as well as the state-owned enterprise that it controls. And again, if you're thinking of the one in the bottom right of the slide, that state government would consolidate that state-owned enterprise because it controls it regardless of the accounting framework that's applied. So in the state-owned enterprise session yesterday, there were some questions and well, could an IPSAS parent entity consolidate a state-owned enterprise that prepares its statements using private sector standards such as IFRS or national framework? And in the IPSAS, there's nothing that says you wouldn't consolidate something because they use a different framework. What the IPSAS says is you'd have to materially harmonize the accounting policies to make the consolidation work. And again, one of the benefits that was touched upon by Thomas yesterday on that I did want to emphasize, in this example, if you're a public sector entity applying IPSAS at a subnational government or even a national government, and you're consolidating a state-owned enterprise that's preparing its financial statements on IFRS, for example, you should be able to align the accounting policies relatively easy because IPSAS draws many of its standards from IFRS and adapts them for the public sector, which means the requirements in IPSAS often include the appropriate accounting you would apply in a private sector context. So there aren't very many transactions that a state-owned enterprise might undertake where you would have an IPSAS that tells you to do something different. And again, there are public sector specific standards in IPSAS that would apply, but that state-owned enterprise would not likely be engaging in public sector type transactions like providing social benefits, for example, where they would have a different accounting from the private sector framework. And again, Thomas highlighted this staff question and answer document that we prepared on the basis of helping public sector entities consolidate state-owned enterprises so they understand the considerations in terms of planning, aligning accounting policies, and how our standards building off IFRS make that exercise a little more practical than if you were just generally trying to consolidate something on a completely different basis than IFRS. With that, that brings me to the end of my short presentation today on subnational governments and consolidation, and I'm very much looking forward to the discussions following. Thank you.
Thank you, Ross. So with this, we looked at the landscape, how should it be? We looked at the IPSAS standards. Now, let's look at two practical cases, which are Ukraine and Albania. And these countries are in the process of doing consolidation. So let's see what they are doing in our region, what are the challenges, and what are their suggestions to us. So for this, from Albania, we have Minister Andy, and from Ukraine, we have the head of accounting, Ludmila, right? Ludmila, you could come first, and then let's see. Let's take about 10-15 minutes and do the Ukraine presentation first. Thank you. So let's hear Minister Andy now about Albania. And then just to let you know that after this, we'll open up for questions and keep your questions ready because these are very interesting examples from the region. So we are expecting to have a lot of questions from you. Andy, come please.
Thank you, Arun. Just to clarify to everyone, I'm the Deputy Minister of Finance, so I appreciate you calling me the Minister. Good morning, distinguished colleagues. It is a great pleasure to be here today to talk to you about the reform undertaken by Albania in the public sector accounting by focusing on the consolidation process of financial statements and reports. You might wonder why I'm here today in my role as the Deputy Minister. So first of all, I'm here because accounting reform and audit reform is part of the portfolio that I cover. And secondly, because I come from a similar background to many of you, so I've worked in the accounting and auditing sphere in my past. So it's a great pleasure to be here. In the short presentation today, I will explain how the consolidation process works, what the legal background is, what the challenges that Albania is facing are, and also the objectives that we want to achieve with the support of the World Bank. Since 2018, the World Bank, through funding from SECO, has been supporting the Ministry of Finance in Albania in implementing the public sector accounting reform. This reform aligns the best international standards and practices and aims to improve decision-making, accountability, transparency, and performance in the public sector. The reform follows a phased approach, so we have a timeline of between 2021 up to 2027, and this is outlined in our national strategy, so the country strategy and the action plan. Key components of the strategy and the action plan are: number one, it's the regulatory framework. So when we talk about the regulatory framework, we talk about aligning Albanian standards and policies on the accounting sector with IPSASB. And it also includes we have a draft law on public sector accounting, which we aim to approve very soon. And secondly, the methodology on public sector accounting. And number two is obviously developing, yes, I know, I haven't reached the next slide yet. And secondly, we're talking about developing professional capacities, so skills in accounting for the Ministry of Finance staff and also for public sector financial officers. So moving on to my first slide, when we talk about consolidation, what we mean is putting together financial information from all general government units into one single report. This helps to obviously see the full financial position as one entity, but also the performance of the government. In other words, it gives us a complete picture, not just what each ministry or municipality does, but what the public sector in its entirety looks like financially. And that is the main purpose of consolidation in the public sector. Moving on to the next slide and talking about the public sector in Albania and the composition of the public sector when it comes to accounting, we have four major pillars. Number one, we have the budget spending units, which includes all general government units, so central government, local government, and also social and health insurance funds. Number two, we have the extra budgetary units. So technically they are outside of the annual budget process, but they're still part of the general government units. And to give you concrete examples, we include here hospitals or universities, so they come under this pillar. Number three, we're talking about units classified, in other words, as non-financial public enterprises, in other words, state-owned enterprises. And here we refer to public utility companies or transport companies as well. And last but not least, we have spending units entities classified as non-financial, as financial public enterprises. And to give you a concrete example here, we have the Central Bank of Albania. And when we talk about consolidating all of these units, you can see here the number of units is about 1,200 in total, and you can see how complex the whole process is. And that's why we need to bring all these structures, and we need to apply the international standards and the best standards to make sure that the consolidation process is as accurate and as up-to-date as possible. Okay, so talking about the legal background and the framework that we have in Albania. So the main law that we refer to at the moment in Albania is the LOB, or as we call it, the Law on Organic Budget. That is our main component, legally speaking, and some of the phases that are included in the organic budget law are the modified accrual basis of accounting. That's what we currently use in Albania. The obligation of government entities to maintain an accounting system, and also to prepare an annual financial statements based on the Ministry of Finance instructions, guidelines, and manuals. Number 3, the Ministry of Finance, once again, is responsible for the preparation of the standards on public sector accounting, sub-legal acts, and also the methodology. And as I mentioned earlier, we have the public sector accounting law in Albania in its final phases, and it's for the very first time in our country's history that we have a specific law on public sector accounting. Number 4, we also have very clearly outlined the obligation of the Treasury to maintain a system for accounts and where it reports on government operations, and it also prepares the consolidated financial statements on the general government. And last, the composition of the consolidated annual budget report, which is once again prepared by the Ministry of Finance and is submitted to the Council of Ministers for approval, and also after that to the Parliament. And talking about the cycle, so the reporting cycle and submission and approval cycle, so we prepare financial statements in Albania on a calendar view, so basically by the 31st of December each year. And then each unit have until the 31st of March to prepare these financial statements. Once they are done, then we have the consolidation at each unit, which is done by April 30th of the following year. And then the Ministry of Finance has to produce and submit its own reports by the end of May. So the final phase is the Ministry of Finance consolidating all of the separate financial statements into one single report. Then that gets sent, as I mentioned, to the Council of Ministers. They have up to 30th of June to approve the report. Once they have done that, the Ministry of Finance is able to publish the report on its website, so to ensure transparency, accountability, and so on to the public. And the very last step is obviously after the Council of Ministers approves the report, this is sent to Parliament. They need to also go through it, review it, and approve it. And by the end of October, the report is also published in the official Gazette. Okay, so as I mentioned, the Council of Ministers approves the report, and what the report includes, so I've outlined here in specific steps. So number 1, it includes the annual statements on state financial transactions. Number 2, it talks about the, as we call it, the factual budget, so the previous year factual budget, or in other words, annual budget implementation report. What this report does is it compares disbursed funds to the objectives that we had set. So have we met those objectives that we've set according to the disbursed funds or not? Number 3, it provides an analysis of the debt sector, so the debt in the public sector in Albania and its composition. Number 4, it also talks about the reserves and contingency funds. And number 5, we also have a public internal financial control report. So this is made up of 2 pillars mainly. So internal control on one side and internal audit. It talks obviously about the performance in these 2 very important sectors in Albania, and it clarifies the strengths and weaknesses. It talks about what needs to be improved and so on. And obviously, as I mentioned, the Ministry of Finance has to publish the full set of reports, not just one of them, but all of them by the end of June on its website. So talking about the consolidation process, and when we talk about consolidation, we are not talking just about merging numbers together. It also is about coordination and verification. The process begins, and I'll explain on this slide, what the main reasons of doing the consolidations are. So the general purpose is to provide reliable information to the public, and also to the relevant decision-making bodies. And what it does, it provides information about financial resources and their allocation. It provides information on the way of financing the activities of the units and the realization of requests on monetary means. It also provides information related to those units' ability to finance activities and to fulfill obligations and commitments. And also it provides information for the performance evaluation of the of the reporting units. Okay, so this is kind of a walkthrough. So it's a flow chart of the whole process from the very beginning to the end. So very quickly, I'll go through that. So as you very clearly know, we record all the transactions. We then have the closing part where we have the adjusted trial balance. And then after that, we go through the consolidation process where we do all the comparison and so on. And then we do the analysis of all those reports. And finally is a set of reports. So based on all the data, we have the set of reports. And very quickly, those reports are the financial position, or in other words called the balance sheet, the financial performance, so revenue and expenses, the financial statement of changes in net assets or net funds, and then the cash flow changes, so the financial statements on cash flow changes. We also produce some statistical statements, so such as numbers on employees or salaries, funds or long-term assets. So these are also separate reports that we have to make sure that we give all those reporting units the ability to compare and use these reports for their own analysis. And last, we also have the disclosure notes, which are used for the preparation and reporting of the financial statements. So disclosure, which I believe is a very important aspect of those financial reports, it talks about the composition of the economic entity in its entirety, so all of the controlled entities. It also talks about the interest that non-controlling entities have in the economic entities' activities and cash flows, and also the nature and nature and changes in the risks associated with the entity's interests. So in controlled entities, unconsolidated controlled entities, and structures entities that are not consolidated. Okay, talking about control, you can see here in the table, so I won't go through in detail on all of this, but it provides the different mechanism on when control is applied and how it's applied for single units, for joint ventures, and so on. Okay, so the consolidation procedures and what they cover. So they cover the harmonization of accounting policies throughout the economic entity. They also align reporting dates of controlled entities to that of the controlling entity. They translate financial statements of foreign operations into the presentation currency of the entity. So in our case, in the Albanian lek. It combines line by line all the statement of financial performance, financial position, and cash flow statements to make sure that it includes all of the controlled entities into that report. It also eliminates all intra-economic balances and transactions between different entities with the aim of having one consolidated report. It also accounts for non-controlling interests. And last, it also eliminates investments of the controlling entity in the controlling entities. So it makes sure that you have, as I mentioned earlier, the controlling entity in its entirety. If I bring this explanation into kind of a workflow, so first of all, we have the entity level consolidation in Albania. And then, so each unit doing the consolidation, as I mentioned earlier, and then you have the central government consolidation, so through the Ministry of Finance. And then obviously you have the general government consolidation, where you have the final report, which, as I mentioned, includes the financial position report. So what is our action plan in Albania? So the ultimate goal for Albania is to make sure that we apply IPSAS in line with the objectives of the public financial management strategy. So we have the 2023-2030 strategy, PFM strategy in Albania. And we want to make sure that the individual and also consolidated financial statements in Albania are based on IPSAS. This process is expected to start in 2027, and we aim to complete the process by 2030, which hopefully aligns with the date that Albania also enters the EU as a full member. What is the goal that will be achieved and how this will be achieved? So we have three main steps and how we want to do this. So first of all, we need to implement the necessary legal changes to remove any obstacles in the initiation of the new accounting methodology and the preparation of financial statements based on IPSAS. As I mentioned, currently we do not have that in Albania. And to do that, we need to start with the law. So that's why we have a draft law is in its final phases. And secondly, the methodology. Secondly, and which I think is even more important, we need to reorganize the treasury branches in Albania and also the structures responsible for the methodology. So currently we have two separate structures in the Ministry of Finance. We have the Treasury Directorate, which covers kind of the implementation side. And also we have another sector, which some of my colleagues here cover, and they deal specifically with the methodology aspect. And obviously, once we establish these new capacities, we need to make sure that we also have the right human resources and the skills for those people to apply this in practice. And that's why what we want to do is we want to enhance the theoretical and practical capacities. We have over 1,500 public sector accountants and auditors in Albania, so they all need to go through various trainings, as you know, CPD and certifications, and that takes its time. So it's kind of a 3 or 4 layer process to get to that step. So very quickly, I know I've run out of time, so I'll talk about the challenges Albania is facing, and then I'll give very quickly some suggestions to other countries that they might take into consideration when they go through their own public sector reform. So, of course, the process that we're going through is not easy. Despite substantial progress, we're still facing some challenges in Albania, and I've listed here 3 kind of main challenges that we currently have. So, number 1, we have incomplete asset and liability registers. So many entities still lack comprehensive inventories, and public asset valuation remains partial. Number 2 is the skills gap. As I mentioned, many accountants in the public sector still need training in accrual accounting. So currently they might have training in cash accounting, but they do not have that specific training in accrual accounting, and also on consolidation methods. And third, the incomplete regulatory framework, so the lack of a specific law in the public sector accounting, and also secondary regulation. So these obviously are normal challenges, but are things that we need to fix, and we need to move at speed in Albania. So suggestions, so very modestly, some suggestions for other countries based on our own experience. So first of all, start small. Start with a phased approach. Do not try to do everything very quickly or in 1 year. Try and phase it out in many years. Secondly, prepare a national transition plan with clear responsibilities and deadlines for each unit, what Ministry of Finance does, what each unit is responsible for, and so on. Number 3, develop standard accounting manuals and a unified chart of accounts, so everyone uses and speaks the same language. Number 4, which again I think is crucially important, is invest in training from the very beginning, because capacity is the key. So do not leave this for the later stages. Make sure that you have the staff trained and ready to implement these changes very quickly. And also test the process through pilot projects before going live. So I think it's very important to have some mock test of the system before you go live, because consolidation takes time, but with clear planning and patience, it becomes part of a modern and transparent financial management system. So to conclude, and I thank you for your attention, Albania's consolidation reform is an important step towards better financial transparency and accountability. We're still improving, but the direction is very clear. We want to align our national accounting practice with the best international standards like IPSAS, and we also want to enhance stronger governance and also transparency in the public sector. Thank you very much. Thank you.
Thank you, Andy. Very useful. And thank you for sharing the existing challenges that you have and suggestions for everyone. So that's very, very helpful. So we have a good 20 minutes to discuss more in detail as you want and to answer your questions. Also keep in mind when you ask your questions that we are sitting ready to know how well you want to implement it and how you want to make a beginning in your countries or if you're already doing in your country the process of consolidation, like I understood today morning Georgia is doing it. So how can we help you to expedite the process? So just tell us how we can help you, and we will also consider under PULSAR too how we can have a technical support provided to you to consolidate the subnational and SOE accounts. So over to you for questions. Katya is ready with the mic. Raise your hands and so, Professor Andreas, you will probably be in the best position to answer this. And when you answer this, also maybe explain a little bit about aggregation versus consolidation, because you explained the consolidation process and what if consolidation takes the form of aggregation.
Thank you very much for your comments and your observation. I think before I come to the topic of aggregation, the situation you describe, if the user of the financial statement is interested in individual financial statements of the two entities, of both entities, this is a clear indication that they are reporting entities and that you should produce financial statements of these two entities, because if there's interest in both of them, obviously you need to present that information for both of them. And I think that's what we see in all the examples also here in the panel. I mean, even if you do consolidation, you still have individual financial statements for someone who is interested in the individual financial statements to have this information as well, because it's not replacing individual financial statements. Secondly, your point on aggregation. I'm really quite cautious about aggregation, especially in the public sector, because we have many financial flows between the entities and even between the different levels of government. So we have quite often flows from the national government to local government, but we might even have flows between various different local governments. For instance, if they together provide whatever garbage collection, healthcare services or something like that, you will have flows between the various local governments. And they can be very material, actually, and therefore I'm really quite cautious using just aggregation, because you might aggregate quite high numbers, which are then double counted, sort of. For instance, let me make an example of Colombia, which I think is really a good case. The largest energy provider in the country is actually a municipal enterprise of the second largest city, Medellin. And this energy provider is as large not because of the city of Medellin, but because it's providing energy in many other municipalities as well. Not in all, but in many. Yeah? And so, of course, you have very large flows. I mean, this is a massive company, a multi-billion company. You have very large flows between the city of Medellin, because it's part of the city of Medellin, and all the other municipalities. And of course, if you just aggregate, you will end up with double counting, for instance, of revenue. Because, of course, by the end of the day, the electricity is paid by the users, by the households, by the corporations, by the private sector. And then, of course, money is sent basically to that company in Medellin. But of course, if you have it aggregated, you will have double accounting for the revenues, and that's of course very much misleading in this case. So I really caution aggregation in the public sector, but I would really strongly emphasize my first point, that individual financial statements are also useful.
Thank you, Professor. Very useful. Arman.
Thank you very much. Excellent speeches and presentations. My question is still the following. So we heard from Andreas is that on consolidation, you need to follow legal and institutional mandate, like how much you control by constitutional legality. From Ukraine, we see that there is independence, we still control. I mean, the question is ultimately, by constitution and legal framework, in many countries, subnational governments are independent. So what in practice, as Ludmila also said in the Albanian case, the central government provides subsidies, subventions, and liabilities. How do we, to some municipalities, others, they don't need it. How to approach a single approach for the whole of country when the constitutional legal basis says they are independent, institutionally they are independent, but financially, in some case, they are dependent. So shall they be consolidated, and whether this consolidation should be applied across all subnational governments or some selectivity should be applied? Thanks.
Thank you, Arman, for this question. And I think the answer is, I would recommend, again, sorry for pointing out to Colombia, which is not part of this region, but I think they made it very clear that they have IPSAS-based financial statements for the national government, which is based on control. So they consolidate state-owned enterprises of that national level, but they do not consolidate the municipalities because they are independent by constitution, as you say. But then they say, well, we also need the whole public sector. We need another set of financial statements for the public sector. And that's not following IPSAS 35 in terms of control, but that's following the law, which says we need to consolidate all public sector entities, which is, of course, all national, all subnational, all municipal governments, but also all the state-owned enterprises of these. As I mentioned, especially on the municipal level, some of them are really big and need to be consolidated as well. So I would recommend to have a consolidation for the public sector based on a law, on a national law, and then you have clarity that also these entities have to deliver the financial statements, have to deliver all the information, because otherwise you have the mess we have, unfortunately, in the United Kingdom a little bit, that they deliver something which is not complete, which is not timely, which is not audited or whatever. And then you have very many difficulties having consolidation. It's much clearer if a national law says you have to deliver, and then we do a consolidation.
Thank you. Yes, Ross.
Maybe just adding on a reminder of a couple of points that I think came up in both the UK presentations yesterday that Manj and Ian talked about. The scope of consolidation year to year isn't static. So you have to continually reassess the entities that are controlled and within the boundary of consolidation. So things like subnational governments likely don't change year to year, but when you get to the very smaller and distinct entities and state-owned enterprises, the scope of consolidation at various levels needs to be monitored and kind of revisited on a regular basis. And I don't remember the exact numbers. I think it was either Manj or Ian talked about the UK whole of government accounts from inception to now moved considerably more entities in scope as time went on, and they got a better understanding of the boundary of control for preparing consolidated financial statements.
That's nice. Thank you, Ross.
Thank you for your question. I'll give a short answer as well, mainly on the political aspect, because I think it's a great question. I think it's a question that many governments, regardless of whether they're in the West or the East or how far they are with the accounting reform, wrestle with. I think there is a difference between functionality, so independence in terms of functionality between central and local governments, and financial independence. So they obviously go hand in hand, but I think there is a separation between the two. And what I'm trying to say with that is that if you are supposed to report as a general government, central or local, because you have to do the financial reporting at the consolidated level to make sure that the public sees what's happening in the public sphere, there is transparency and all that. I don't see anything wrong in terms of that. However, if we want to ensure in the long term independence of the local government, and this is an example, for example, what the UK does or has done in the past very successfully, and I've lived in the UK for a number of years. So they have a set of local taxes, so council tax, business rates, and things like that, which in a way ensures that they have some kind of independence financially from the central government as well. That's something in Albania that we are going through at the moment. So we have some fiscal reform to try and replicate a similar council tax approach in the local sector. So functionality speaking, yes, independence is critical. Financially speaking, at the moment, I don't see that as a huge problem, but it's something that along the way and in the long term, we need to give the local government more mechanism to have their own finances so that they, in that case, have the opportunity to be as independent as they can. But the reporting on a central level or local level, I believe is crucial for the public. So I think the ultimate goal of any government is to ensure transparency to the public, accountability to them. So it's important that we do that. Thank you.
Thank you. So if there are no more questions with this, we could close this session. And in the next session, we will know more about the tools and techniques of consolidation. Let's be back in 30 minutes to start with the next session. Thank you.
Ladies and gentlemen, let's get started. Just missing one panel member and the head of PULSAR just walking in. Good. Hi, Minas. Good morning, ladies and gentlemen. So let me start the new panel on consolidation techniques and tools. So we're delighted to have a very strong panel. So yesterday we had a lot of good discussions on standards, on accounting frameworks, on accounting policies, on the difficulties on aligning these accounting policies, particularly with very independent entities at the local government level and SOEs. And so today and now we'll talk more about how to make it work. But before we do that, I really wanted to take a few minutes to thank and congratulate the PULSAR members for really the courage to take on these very difficult questions about monitoring, consolidating and disclosing material risks which are off budget. So really a bit the future of PULSAR. So obviously it's really the hard reforms that are being left for now, but it's also very timely in these very uncertain times with increasing volatility. I think there's additional scrutiny on fiscal transparency, on fiscal risks from rating agencies, from whomever. So there's a bigger return on investment, I hope, also of really tackling head on this potential fiscal off-budget fiscal risks. But indeed, as we heard, it's very difficult to do. And so we really want to take advantage of this eminent panel, which we have, to see how it can be done. And so we'll start with Khurram Farooq. Not sure he needs an introduction, a pillar of PULSAR and CFRR as well, one of our global leads at the bank on financial management information systems, has worked around the world, seen successes, but also challenges, and I think a lot to learn from that. I think that can be quite timely, as many of our PULSAR member countries are working on upgrading their financial management information systems. For instance, Albania is just revising its, upgrading its AFMIS, including at the local level. So congratulations for that. Or just developing new ones, I think, in North Macedonia as well. So it's great to really hear from your lessons. Then we'll have a presentation by Songwook Paul Nam, so Director for Settlement System Operations at the Korea Financial Information System, SOE, I think, no? It's an agency. So a brain of the brain, which is really a bit our gold standards of financial management information systems and consolidation. But we'll also hear then from Ivona, the mother of CFRR, and actually Paris worked a lot on corporate financial statements, on the IFRS, on the ROSCs, and very interesting insights in terms of the quality or challenges we have in the IFRS financial statements that need to be addressed before we start thinking about consolidating, right? And then we have the pleasure and honor to have Hans Hartmann, partner of PwC Austria, who will share his view and lessons learned. So really looking forward to this panel. So we'll have these presentations and then 2 quick questions and open up to the floor to hear from you. And please do prepare your questions. It's really the time to discuss how it can work and what we need to be mindful to make it work and to really leverage technology in a meaningful way to facilitate this important agenda. So without further ado, let me hand over to Karam. Thank you for your wisdom.
So I will share a case study and then some key issues in consolidation and then scope of consolidation. We have talked a lot about scope of consolidation, so I'll skip some of the slides in the interest of time, but main slide will be on the technology aspects of consolidation and then some lessons learned. This is one very large country in East Asia. So 500 plus local governments, 60,000 villages, and 3 different reports to 3 different recipients. So every local government is asked to provide 1 report to the Ministry of Home Affairs, which is their parent ministry, for consolidation of all the local government accounts. Another report, which is a statistical report to the Ministry of Finance for fiscal management and policy decisions. And another report, which is an accounting report to the Treasury for IPSASB consolidation or accounting consolidation. So timelines of these consolidations are different. So there is no single truth in all these reports because they are on different formats, different timelines. And the technology used by the subnational government is also different. Some are using one IFMIS system, some are using another IFMIS system, and yet a few which are using another IFMIS system. With that, they have different budget classification and chart of accounts. Very typical that we see in many other countries. And then budget classification, they have been asked to standardize their budget classification up to level 2 or 3. But then within that, they have issues on budget classification. It's not harmonized, it's not consistent. So, and then capacity, obviously, when you're asking, it's complex. They're asking every local government and every ministry to submit every transaction for consolidation, which is again very complex, and asking that villages to submit all the financial statement where they don't have accountants. Everything possible complexity, they have put it in the system. So my next few slides will be focusing on how we can simplify. So globally, we see concept of consolidations. These are the issues that we typically see in most of the countries. The consolidation ends, the concept of consolidation is not, either there is no legal framework, or legal framework is very weak. Legal framework is only to the consolidation of the budgetary entities and not about IPSAS consolidation. Many countries do GFS consolidation with the subnational consolidation, but IPSAS consolidation is really a problem in most of the countries. Separate systems for budget management. Especially in ECA region, I have seen some of the countries, they have systems, IFMIS systems, but they are only for budget management. They don't have accounting. They don't have general ledger in the system. So they do the accounting in spreadsheets. So parallel, then do a book a transaction, payment transaction in IFMIS system for budgetary management purposes, warrants and allotments and all that stuff. But then you would do a separate entry in the accounting spreadsheets. And these spreadsheets, hundreds of spreadsheets are actually running around for consolidation at various levels. And then chart of accounts, again, not a consistent chart of accounts. There are differences, no? And then other issues, accounting procedures are not well defined, especially the inter-entity elimination. That's not very well defined. How do you do the accounting? Most of the countries, they are just doing aggregation and not elimination. Elimination is really a problem, even in advanced countries like Portugal. Yeah, and then not much, there are some confusion and fuzziness how to use some of the accounts of the chart of accounts. So everybody has a different interpretation of how to use the chart of account codes. And multiple IFMIS systems, they are maintaining multiple chart of accounts. So this is a broad concept of the consolidation entity. So as you see, this is the public sector, and within the public sector, if you can break down into the general government and the SOE, and within the central government, you might have SOEs. So central government SOE is the IPSAS consolidation. And then central government and local government consolidation is the GFS consolidation. And within the central government budget, there are a lot of different types of entities. You have the constitutional bodies, you have the MDAs, you might have statutory funds, you might have extra budgetary funds, you might have donor funds, and then you might have trust funds. And you might have independent central budgetary entities which have their own FMIS system. They do not necessarily, they do not follow the IFMIS system. So you have a complex landscape of systems in which you have multiple sources of data. So as Manj mentioned yesterday and Manuel mentioned yesterday, we need to identify the scope of consolidation. This is absolutely fantastic. And this is a visual picture of what is the whole, the full picture, but you can develop a very detailed spreadsheet in which you identify all the entities which are in your consolidation parameter, and then classify those entities as Manuel mentioned yesterday, Emmanuel. Something about the budget classification. I think the budget classification and chart of accounts is at the core of consolidation. This is the infrastructure. This is the framework around which you can simplify classification. It's a multi-dimensional chart of accounts or budget classification. You might have an entity or administration classification, organization classification, fund classification, functional classification, object classification, program classification, and then there are other segments of classification. Sometimes they have 9 segments of classification. So, but of all the segments, you don't need to follow the international standards. Only there are 2 segments of budget classifications you need to follow the international standards, which are prescribed by GFS. One is the functional classification, and the other is the expenditure classification. So rest of the segments are very localized. So there are a lot of flexibility, actually. Like the ministries, you have whatever structure of the ministry you have, you identify that. Whatever programs you have, you identify that. Whatever funds you have, statutory funds or other funds you have, you can source the funds. So you can define it locally. So there's a lot of room for flexibility. And then the bottom is the accounting, the transaction that is happening at the bottom of this diagram is the accounting entry that is happening. There is an expenditure of goods and services, and that's the accounting part. So you need to map all the entities with the top layer. You have to give the code so that the consolidation becomes easy. And then you have to map the accounting codes with the accounting of the subnational or SOEs, because they might have a slightly different accounting structure, but you have to do the mapping. If you cannot prescribe the chart of account, ideally you prescribe a standardized chart of account, at least at the higher level, and then give them flexibility to do their own codes within the sub levels. That's the ideal. But sometimes if you have limitation, then mapping or maybe the bridging table is the next best thing that Manj mentioned yesterday. So I will skip this slide in the interest of time. But here is the structure of the GFS, right? So GFS has very clear guidance that you just standardize the main items, maybe up to level 2 or 3. Level 4, 5, 6, you do whatever you want to do. So there's a lot of flexibility. The argument that if you prescribe a chart of account to the SOEs, you are taking away their flexibility or autonomy is not very powerful, because you want to give them, for example, payroll. This is one big category, and you want to do the goods and services, another big category. What's the big deal in it? Within these broad items, you can have sub-items which are defined to your own requirements. A railway might have different sub-items under the purchase of goods and services, and a fertilizer company may have a different sub-item within. So within the broad categories, you just prescribe the broad categories and give them flexibility to define at the sub-item level. So that's the GFS guidance. I'm saying that. I'm not saying something out of my own thing. No, this is, so a lot of flexibility, actually. It's a misunderstood concept that maybe you are taking away their autonomy. So, and this is the overall architecture or landscape of what is happening in a country. So the bottom is the source systems. So you have this IFMIS. In IFMIS, you might have commitments, accounts payable, accounts receivables, general ledger. In many countries, by the way, in ACCA, as I mentioned, there is no general ledger. So you have to have a general ledger if you want to do accounting and integrate accounting with the payment processing systems. But then there are many other systems. You might have budget planning, payroll, pension, debt management, asset management system. Debt management system is holding your liabilities. Asset management, in some countries, there is a separate asset management system. And then maybe audit management system, and then you have tax. Revenue side, you might have multiple systems, tax administration system, custom administration system, non-tax systems. No? So map the sources of data. These are all transaction processing systems. These are not used for consolidation. That's my another big message. IFMIS is not a consolidation tool. For the consolidation, you have 3 options. Either use Excel, which is most of the countries are using Excel. Second option is you would use a proper consolidation tool. And the third option is you use data warehouse. So in my diagram, I have put both the consolidation tool as well as the data warehouse, because consolidation tool is my recommendation, because consolidation tool helps you do the elimination. It maintains partners, the trading partners. If there is an elimination between the 2 entities, these are treated as trading partners, and you can automate the clearing procedures, and then it can automate large number of transactions. Don't underestimate, as Andreas Beckman mentioned in the morning, don't underestimate the elimination. It's very, very volume. It's an onerous job to do the elimination. So if you can automate at least 70 to 80% of the inter-entity clearing through the consolidation tool, which has a general ledger, by the way, like USA government has a general ledger, PeopleSoft. Serbian government has a SAP general ledger, and Kingdom of Saudi Arabia is using a Hyperion, the consolidation tool. So use a consolidation tool instead of the data warehouse. Data warehouse is used for analytical reporting, which is also needed. For example, if you want KPIs to track against your budget, so that's the non-financial information together with the financial information, a lot of other reports. You can do the data warehouse, but data warehouse is not a very good option for consolidation. So that's my main message. And then, again, lessons learned. This is my last slide. Policy is very important. As we heard also, law, ideally law should define the perimeter. But if there is no law, then try to improve the law, because that will give you the mandate to do the consolidation. Institutional arrangement. Normally, consolidation is done by a very small, actually, section. It's a reporting section within Treasury or Ministry of Finance. So hire some consultant or some expert, like we heard yesterday, who has done it before many times, to do the first cut of consolidation, maybe using Excel sheets. It's fine to do the Excel sheet in the beginning, and while you are developing your own consolidation tool. And the standardize the chart of account budget classification to the extent possible. And then chart of account, a lot of issues on the chart of account, internally not consistent. and then use a technology, consolidation technology, as I have mentioned. And technology on IFMIS for subnational, again, there are different variations of how various countries are doing it. In a centralized setup, like France, for example, or Pakistan, one IFMIS is used by all the national government as well as all the subnational governments. But in a decentralized setup, like Indonesia, for example, they have a separate IFMIS for the subnational government and a separate IFMIS for central government. So whatever is the situation, the important thing is that the standardized reporting requirement and a standardized chart of account budget classification. So that can simplify much of the consolidation processes in my experience. Thank you.
Thank you very much, Khurram, for your very efficient delivery and very good recommendations, practical recommendations on the chart of account. Good to hear that there's flexibility, right? So we don't need to overprescribe all the segments to everyone. But it's also very important to have a good general ledger in your IFMIS system. So for all the countries that are upgrading or developing the IFMIS, make sure you have that. And the consolidation tool to make your life easier. We heard yesterday UK's experience working with Excel and how painful that was. So I think there's some quick wins there. But let me move over to Paul and let's see a bit the gold standards of IFMISs and basically a D-Brain. Thank you, Paul.
Okay, thanks for the introduction. For me, it's going to be a second time to visit Vienna. Last March, I participated in the PAMPAR event. So thanks for the invitation from WorldBank, especially PULSAR, for this wonderful event. So I'm very honored to be here. Actually, my name is Saung Nam. You can call me Paul. I'm from Korea Fiscal Information Service, a public institution under the Ministry of Finance. It's a great pleasure to be here with you today at the Public Sector Accounting and Reporting Program, the PULSAR, EDUCOP, and FINCOP workshop in Vienna. It focuses on consolidating public sector financial statements. Today, I'm going to share Korea's journey in digitalizing public finance through our initiatives, Korea's Dividend Plus, revolution in accounting, reforming the government settlement and financial reporting. Let's begin with the first slide. So this is my talk today. So I go over who we are and then also history of FMIS in Korea, and then a little bit about the Dividend Plus. And then since this is focused on the financial reporting, so I'm more focused on the settlement model of Dividend Plus. And then I'll walk through the Korea's national accounting framework, like history and institutional changes. And then next, I will explain the national settlement procedure and composition of the financial report. And then I highlight the recent improvement of the Dividend Plus system and our ongoing effort to strengthen transparency. So finally, I will share a major achievement and provide the update on our continuing reform project aimed at advancing national settlement report. So I guess many of us are already familiar with who we are. Like I'm from the Korea Fiscal Information Service. Well, we are dedicated public finance management organization established in 2016. So it is a public institution affiliated with the Ministry of Economy and Finance of Korea. So in the middle of the slide, you can see the development history of Korea's financial management information system, IFMIS, starting from the first generation of the budget system, which is Excel-based, and all the way to fourth generation Dividend Plus, which we are using right now. So Dividend Plus system, so third generation, are used for 14 years. And then we have a new system, which is opened in 2022, which is called Dividend Plus system. So when you look at this slide, you can see the overall overview of our Dividend Plus system. So on the left side, you can see the entire life cycle of the public finance supported by the Dividend Plus system. So the cycle starts with establishment of the 5-year National Fiscal Management Plan, and followed by the budget formulation and the budget execution, and all the way to the account settlement. So this essentially constitutes the central financial management information system. So on the right side, so we have the finance linked system, which integrates financial related information across the government organization. So through this finance linked system of Dividend Plus, so we are consolidating fiscal data from the subnational level government and then also SOE using another system, ALIO, which stands for All Public Information in One, which is the platform for public institutions, the disclosure system. So we are integrating these two the major system to consolidate to produce the whole of the government financial data. And also finally we have open fiscal data, which is the public disclosure system to show the public in an easy to understand and transparent manner for fiscal data. Okay, this is the settlement module. I'm focusing on the settlement module for financial reporting of the dividend system. So Dividend Plus system streamlines the entire settlement process by automatically generating closing reports. So one of the key features is the automated journalizing feature. So it creates the financial accounting slip without requiring users to manually perform double entry bookkeeping. So the slides you see here shows a detailed diagram of the account statement functions supported by Dividend Plus. So the module handles two types of the settlement account. So first one is the budgetary settlement of account based on the cash basis, and also a financial settlement of account based on the accrual basis. So as shown in the slide, the finance settlement module includes the key automated processes such as automated journalizing and financial statements, closing adjustment, and also elimination of the intercompany transactions, and also cost accountings. So all of these processes are seamlessly integrated into the Dividend Plus system, ensuring accuracy and consistency and efficiency in financial reporting of Korea. So this is more focused on the automated the journalized function. So these slides illustrate how automated journalized the function works within the settlement module in dividend system. So if you look at it, the first step is the request form of creation from the fiscal operation, and then step 2 is the approval process, and then step 3 is a automated function. So journal entry generation. So using a pre-configured reference data, such as the unit operations and the transaction codes, the system extracts the necessary information from the transaction. So it then automatically classifies these elements into the debit and credit entries and generates the journal ledgers. So this process is visualized in step C through D on the slide. And then finally, the step 4 is batch processing. So after the journal ledger is created, so batch program learns automatically at 5 a.m. Following day. So this program generates both the general ledger and the subsidiary ledger, and produce the basic data for financial statement. So what's important to highlight here is that this entire workflow from request creation to ledger generation is fully automated. So it minimizes the manual intervention and reduces errors and ensures consistency across Korea's financial reporting system. So this is the test of our history in the accrual-based accounting. So it all began in 1998 with the initial policy announcement. So then we laid the regular foundation through the National Accounting Act in 2003, followed by the National Accounting standards in 2009. So after establishing the legal framework, we conducted 2-year pilot program within the central government. So I think this is very important. So before you finally, the full accrual-based accounting, so we did a final, testing for 2 years. And this is the, okay, I'll skip because of time limit. Okay, this slide presents a legal framework at the Korea accrual accounting system. So there are 4 levels of the legal structure, along with the practical guidelines to support implementation. So at the top is the National Accounting Act, which details the overall structure and the components of the government financial reports. And then at the bottom, the practical processing guidelines supports day-to-day operations by explaining the chart of account and providing instructions for settlement preparation. So together, these layers ensures a comprehensive and consistent legal foundation for Korea's accrual accounting system. These slides outline the national settlement process, which is carried out in 7 stages. So I think more or less, every country has the same, the procedures. So I'll skip this part. Okay, this slide explains how national settlement reports are structured. So the report consists of 4 main components of settlement. The first one is a settlement outline, and the second one, revenue and expenditure settlement. And the third component is called financial statements on an accrual basis. And finally, performance report. So if you look at some more details for financial statements, there are 5 key reports, which are the statement of financial position, the statement of fiscal operation by nature, the statement of financial operations by function, and the statement of the changes in net asset, and then the statements of cash flows. So the slide highlights the major updates to the Dividend Plus system based on our operation history between 2017 and 2023. So the changes fall into 7 categories, including improved verification and consistency check, and the new and modified report, and enhanced linkage functions. As you reminded, our Dividend Plus system is a locally developed software, so it is very flexible to expand to the changes in the legal the framework, and also to expand the new the reports. And the additional updates were made to the procedure improvement, government restructuring, and to enhance user convenience. So these updates have strengthened the system's accuracy, usability, and alignment with the evolving administrative needs. So if you look at this slide presents the data on updates to the Dividend Plus financial settlement module over 7 years. So the number of functional changes has steadily declined, so indicating system stabilization and maturity. So this slide presents the top functional changes made to the Dividend Plus settlement modules from 2017 to 2023. So the most frequent updates were in the consistency check functions. So which are critical for maintaining accuracy across the repetitive and sequential financial procedures. So the second most common changes were user convenience improvement, followed by verification functions. So this trend reflects a strong focus on reliability and usability in Korea's financial settlement system for financial reports. So this slide shows some achievement from implementing a core accounting system in Korea. So Korea's accrual accounting reform has brought several major improvements to public financial management. The first, it provides a comprehensive financial data, so enabling a better and mid to long-term fiscal planning and more accurate assessment of fiscal soundness. So especially by recognizing liability like pension provisions. So second, it allows for systematic management of national assets, including infrastructure and assets under construction that were previously excluded under cash accounting. So third, the adoption of national accounting standards has improved the credibility and the consistency of government financial figures. So fourth, the scope of reporting has expanded to include public institutions. So enhancing both international comparability and domestic transparency. So fifth, the reform supports performance-based financial management by linking program costs to policy decisions. But despite these achievements, so two key challenges remain. So first one is improving the usability of accrual-based financial data for decision making. And second challenge is making financial reports easier for the public to understand and through a clearer and more accessible format. So this is what we are doing right now. So as you mentioned in the previous slide, so the actual utilization of these reports remains very low. So especially among the public, general public. So despite the significant effort invested in the producing these reports, to address this issue, so we launched the National Financial Settlement Report Reform Project, which runs from May 2024 to December this year. So the goal of this project is to make settlement report more accessible, understandable, and practically useful to the public. So several key challenges have been identified, such as the use of complex and technical terminology makes the content difficult to understand, and then an excessive number of public accounts item obscures the overall financial pictures. And the report spans about around 1,005 pages long, making it too lengthy for efficient analysis. And then in Korea, it lacks the clear cash statements, which is essential for tracking the movement of the national funds. So this reform project aims to resolve these issues and deliver financial data that is transparent, concise, and meaningful for both citizens and policymakers. So now I will walk through the key outputs of the National Financial Settlement Report Reform Project. So first, so we introduced the new chartable account aligned with the revised settlement framework. This simplifies report preparation and improves the public accessibility. So second, so we reorganized the statement of financial positions by presenting accounts as single line items, removing a short and long-term split at the top level. So while maintaining them at the sub-account level. So this is because such a distinction are less relevant for government, which manage capital from medium to long-term perspectives. So we also streamlined level 2 accounts into 3 clear categories per asset and liabilities. Third, so we've identified financial operation statements by sector and economic classification. So this allows costs to be aligned with the budgetary functions, linking budget and financial accounting to support program management and the fiscal decision making. And fourth, so we've added cash flow statement using direct method. So this presents cash inflows and outflows by operating investing, the financing activities, enabling year-over-year comparisons, and clarifying capital expenditures. So finally, we implement the consolidated annotation system, merging notes and appendixes into a unified format to enhance clarity and transparency. So together, these reforms make Korea's financial settlement report more streamlined and transparent and user-friendly. So this is the last slide of my presentation. Let me now introduce the expected benefit of this project. The first, the reform improves the public understanding by simplifying financial statements. So both the financial position statement and the financial and operation statement have been condensed from several pages to just one page each. So in addition, so the number of disclosure items has been significantly reduced from 102 to 32 in the financial position statements, from 76 to 27 in the financial operation statements. These changes make the report much easier for the public to read, interpret, and engage with. Second, the reform enhanced the comparability between budget and financial statements through the introduction of sector-specific financial operation statements. So these statements provide the comprehensive data on total costs, revenues, and net costs by budget sector, enabling a more effective comparison and analysis across government programs. The third, the reform strengthens the government ability to analyze cash flows. So by categorizing inflows and outflows into operating, investing, and financial activities, the new cash flow statement supports a more accurate assessment and the trend analysis of fiscal performance. So in summary, this improvement will make Korea's financial reporting more transparent, efficient, and meaningful, not only for policymakers, for the public. So this will end my presentation. Thanks for your attention.
Thank you very much, Paul. And I'm totally conscious how difficult it is to summarize such a rich reform agenda in only 20 minutes. But thank you very much. We'll be sharing the presentation, obviously. And I think Paul is still with us for a couple of days. So if there are follow-up questions, please do not hesitate. Very rich presentation. I think just a couple of points I want to highlight. One is really the institutional setup, which is quite interesting. I think many countries struggle with attracting, retaining the ICT skills for their core financial management information systems, and so the agency model, and you quoted a couple of other examples. I think here in Austria, it's a similar example, is quite interesting. Also that there are some sub-information systems that feed this central IFMIS, such as ALIO on state-owned enterprises. So I think that's important. The asset registry, that's very important. I think the automated journalizing system, I think we all dream of that now that we see that. But I think it also does require having comprehensive, timely, and accurate data in digital formats to start with, right? And I think that's something where we struggle a bit, right? Particularly on the asset registry, asset valuation. That's a point you mentioned. But also your user perspective is very interesting, right? So why are we doing that? Not just for financial management, but also for the citizens, the link to fiscal transparency, building trust, hopefully, therefore also willingness to pay taxes, credit rating. So it would be good to see maybe as a study, what's the impact of these results in that respect. And last but not least, I think the point you mentioned about really automating and simplifying the consolidated notes and disclosures. I think the devil is really in the details. I mean, that's what we see, and we'll hear from Ivona in that respect, also what comes out of our ROSCs. So having really a system that looks at that and systemizes is very appealing as well. So thank you very much. Ivona, let me hand over to you. If you can maybe share your views also and your experience coming a bit from the private sector corporate reporting side, and so what we should expect coming in the consolidation, the link with this report. Thank you.
So as we have seen throughout these two presentations, there are lots of different consolidation techniques and processes. And obviously, IPSAS standards are not defining these techniques, yes? So there is a lot of to be learned, and each country is different. And these tools and techniques depends on also on country existing systems like accounting standards, but also policies, coverage of entities, available IT systems, which can be really very various for different types of entities. And we can name it here budget entities, but subnational level can be totally different. And in many countries, they are autonomous, semi-autonomous, and they can have totally different set of IT systems, even within its own remit. State agencies are another universe, which often are reporting on, let's say, a commercial basis, but still there are some, there is influence of public sector transactions. SOEs, still this is another universe, lots of differences can be applied. Not all of them can even report on IFRS basis because it depends on national requirement. EU requires actually that consolidated financial statement of listed companies must be following IFRS, but there are other single entities as well. So based on the ROSC, what we have encountered, the best quality of the reporting is actually experience from listed companies and highly supervised companies like banks, financial institutions. So you can expect the better quality for these entities. For other entities, you have lots of variation. And also, in some cases, there are national, I would say, diversion from IFRS due to the sectoral accounting regimes. So actually, in order to have a well-designed consolidation process, you need to sort out first the quality, because whatever is consolidated, it doesn't have to be good quality. So consolidation as per se is not solving all your problems. And one of the benefits of consolidation should be better quality, more reliable and comparable financial information, also for monitoring, but also for asset management, for management of liabilities, public investment management as well, KPI. So all these benefits can only be utilized if we manage to get high quality of financial statements. And one example of actually IFRS at the SOEs is when in Poland, one of the largest power sector had to implement IFRS financial statements, and they realized that even within the group, IFRS doesn't mean the same accounting policy. So the first step was actually to unify accounting policy to have the same level of standards application, and there were lots of differences. So even within the same application of IFRS, you have different alternative treatments allowed, so you need to sort it out. So how to actually do it? You can start with some mapping exercise, possibly depending how much power you have, you can try to prepare some accounting policy which should be applied. So if it's possible, you can impose on public sector entities and SOEs, but I don't know whether it's doable because lots of SOEs are listed. You might have some control, but it's also large groups, IT systems with changes are very costly. So in this mapping exercise, AI can be used, and this was mentioned by Kuram, yes, because you will have lots of different chart of accounts. You need to decide whether to have IFMIS-based approach, but you cannot expect SOEs to apply IFMIS. It would be not doable, so probably some consolidation packages, maybe some interfaces, maybe trial balance. And this information, the outcome of this whole exercise is to have really reliable financial data. But there is a need also from oversight entities, also sectoral entities, to have more granular information because, you know, these consolidated financial statements, very short, but me as accountant, auditor, I would like to drill down and to see what's behind these aggregated numbers. And I think that everybody wishes to have a button and a dashboard to drill down, to have more details. I think it's also relevant for public investment management, but this reliable information can be also used for setting KPIs, targets for SOEs to actually hold this management accountable for targets. I mean, it's whole universe of information which we can use, and at the last point is that we are talking about financial information, but gathering non-financial information, including ESG, maybe some PSO, which means subsidy, can be even more challenging, but it's next to come.
Absolutely. Thanks, Ivona, for sharing indeed all your rich experience. I saw Hans nodding, so I think it brought back some memories, I guess, of auditing some of these conglomerates and the consolidation. But thanks a lot, Hans, for joining us. Thank you also for lending Bernard to PULSAR. I think what two great presentations yesterday. He really charted a bit the road for that, and so it's a great in-kind contribution from PwC to the PULSAR family. Thank you for that. He mentioned also the relationship yesterday. I think that's something that stuck with me, right? It takes two to tango or two vals, I say. But the point you mentioned about political economy, Ivona, no? So can we enforce or how do we actually bring it? So let me hand over to Hans. It would be great to hear from you a bit your practical recommendations, techniques and tools on how to get it done. Thank you, Hans.
Hello, everybody. Actually, I was introduced, and it's an honor for me to be here. It's not such an. I'm not living far away. I'm just living in Vienna. I'm a partner at PwC, and I like what I do, and I like doing consolidation. So from my heart, I'm an accountant. I like the numbers, and consolidation for me is not just techniques. It's more an art. And one of my tasks is just to compare the private sector and the public sector. On the one hand, they are quite different. On the other hand, they have similar problems. What we are doing here in Austria is serving our clients in implementing consolidation systems as well as doing consolidation as a service. So we are helping them on an ongoing basis to do consolidations. So I want to sum up what was said before a little bit. And what technical challenges do we have in the public sector consolidation? Sometimes They're the same as in the private sector. Sometimes they are different. So let's go to number one. We have those heterogeneity of public sector state-owned entities. They are very different, as said before. We have different accounting systems. We have IFRS, we have local GAAP, we have modified local GAAP, a variety of accounting rules. And all those rules have to be aligned to have one consolidated, let's say, group in that way. And I think in the public sector, this is a much more complicated thing compared to the private sector, because in the private sector, let's take a supermarket group. You have just supermarkets. Yeah, if you have a let's say a chemical group, you have subsidiaries doing chemical things. In the public sector, you have an extreme variety of different, let's say, state-owned entities, subsidiaries, very heterogeneous. And you have, let's go to number two, you have no common chart of account. So you have local chart of accounts, you have industry-specific chart of accounts. So you have for insurance companies, special chart of accounts was said by Ivona before, and all those has to be aligned. And you almost never have an IT integration. That's point three. So historically, state-owned entities use their own systems, and we have very, very old systems, new ones, and those interfaces are more than a problem in the real world. So mostly interfaces are not available. And actually, because Excel was mentioned before as a consolidation tool, for some, Excel could be a fit, for most not, let's say it in that way. But also in the private sector, we have companies, bigger companies, consolidating in Excel. So some years ago, it was a part of a listed company, so a subgroup, and they made a consolidation Excel. And the funny or strange thing was that we had about 30 subsidiaries. They were all consolidated. And then we had 35 subsidiaries, some entities. And then we recognized that Excel was not calculating right. So 2 + 2 was 7. And you do not recognize it. So the auditor recognized it. So sometimes Excel is just limited and only for smaller things. And we have a lot of different consolidation systems, and you can use those consolidation systems private and public. And I do not have a favor for one of those systems, I have to say. They are all good because consolidation is not a new technique. So the logic is very old. The systems are all, let's say, open to the needs. You just have to try to find the solution, especially for your tasks. So you do not always need a Mercedes. Sometimes you need a smaller one. Don't want to mention a special brand at the moment. So it's just a fitting what you need to find out. And to be honest, I would always take someone who is a sparring partner in selecting such a tool, because every tool provider tells you it's the best tool. So you need someone who is especially able to be a sparring partner and compare the tools and your needs, because sometimes you do not need everything what such a tool provides. And for the money perspective, it's very important to know what the tools can do and what you need and what you do not need. And let's move to number 5. You have those lack of timeliness of information. There's also in the private sector sometimes a problem that you do not have the information for the consolidation process available. And in the public sector, you do not have something like mid-year reporting or something like that. And number 4, because I made number 5 before 4, number 4 is an interesting thing for me. In the private sector, control is control. Control is you get the dividend, you make the budget, you take the most important decisions. In the public sector, I'm not so sure who controls whom sometimes. So it was also said before, if you have a national energy provider, and this energy provider is also a listed one, I'm not so sure if the minister can always tell what he wants, because the CFO of the energy provider is probably much more powerful. So this is a very interesting question just in the public sector. So these are the challenges. Now let's move to the techniques, how we can address some challenges and how we can make consolidation probably much easier, because what was said before, consolidation is on the one hand to have the right numbers. And I'm not sure, probably someone of you had time to look a little bit in the Austrian newspapers or looked in the news, television. And this week is very emotional in Austria, because a lot of people, let's say, are not sure if the numbers of Austria are 100% correct or not. So if you do a consolidation, on the one hand, the numbers have to be correct. On the other hand, you have to be a materiality aspect, because you know private sector consolidated financial statement is 100% correct. That's not possible. So you have to find a way to define your materiality. To give you an example, if you take the biggest Austrian construction company, it's called Strabag. It's the third largest Austrian entity. They have about 800 subsidiaries, and just 400 of those subsidiaries are consolidated, and the financial statements are right. So that's a definition of materiality. So materiality is always a qualitative and a quantitative aspect. Quantitative aspect could be, for example, revenues, expenses, total balance sheet, number of employees, probably some other numbers. And qualitative aspect is always, is this subsidiary important for the message of your consolidated financial statement? So if there is some development in those subsidiary, and the subsidiaries is small, but the future is a big one, probably you should consolidate it as well, even if the numbers are not so high. Then you have this materiality aspect in the intercompany transaction topic. Intercompany transactions, if you have a good system, you can align each intercompany transaction with the other one and just consolidate it. If you have a, let's say, normal system, often this is not possible. And then you also have to find a materiality for intercompany transactions. So second point, alignment of accounting policies. It was said accounting policies have to be aligned, but alignment does not mean they have to be, transactions have to be 100% treated the same way in consolidated financial statements. So I have one example. If you look at houses, yeah, and the useful life of houses, it's a difference if it's a school or if it's a ministry building. So it's the same building, but the useful life could be completely different. It can also, if you have a ministry building, completely different if you're in different areas of your country, depending on the, let's say, weather and so on. So there is always a wide range of useful lives. And this is also in the private sector. At the moment, I'm doing a project in aligning bigger subgroups, and there will be a big variety of useful lives. And this is okay from my perspective. You can go to provisions. Also in the area of provisions, you have a variety and a, let's say, a bigger playing field. So it has to be correct, but not 100% treated the same way. I also talked about intercompany transactions before, and I don't want to stress that topic because it was mentioned before. It's always depending on the system. If you have good system, you can do it line by line. If you have a, let's say, extendable system or an old one, you can do it from the other side. So if you know there are subsidiaries within the company transaction, you can think about flipping it out 100% or find another way. So also in that area, a big materiality aspect is included. And to tell you the truth, in the private sector, most of the bigger groups have no line-by-line intercompany transaction. There is always a materiality aspect in it. Let's go to the next slide. Which tools do we have to address those public sector consolidation topics? Actually, we have always the same problem. We have a tool and we have to decide which tool we need. We have a process and we have people. If one of the three aspects didn't work, you do not need to do a project, let's say in that way. And you have always to compete for resources in such an implementation project. You have a gap of internal capabilities. So in the public sector, the capabilities are much lower often than in the private sector. You have an uncertainty how to start, how to convince your staff to follow you. And you have this political aspect, long-term planning versus quick wins. If you are the one who has to do the project, you have a more mid or long-term perspective because such a project is not done in just 1 year. And then you have your minister, and you do not know how long he is in his position, right? And he needs some quick wins. And you have always this challenge between long-term and quick wins. Employees are sometimes resistant, and if your employees are resistant, you have to just convince them. If they are not convinced from the system, it will not work. And one consolidation tool is needed for everything. So as I said before, we have a variety of consolidation tools, and I have no favor for one. You have SAP tools, you have Oracle, you have OneStream, you have Tagetik, different ones. They all can do consolidation, and you have to find the right fit. And this fit is depending on the deployment model. Is it in a cloud? Is it on premise? The data integration you want to have, and you're able to make the user accessibility, the flexibility to recreate and invent, performance, scalability, and one of very important point, licensing and cost model. And as I know, there is a big range in costs in those tools. Yeah, so I would recommend to be very careful. And yeah, I think in the end, to sum it up, you have a bigger problem than the private sector because you have this heterogeneous entities. You have no common chart of accounts. You have to align it. Alignment does not mean 100% the same. Often no IT integration, and you have this topic power to direct. If you talk to the finance departments in ministries, you all know what you need, but often the political aspect is lacking to give you the power to do that. And to do the consolidation, you have a lack of timeliness of information. But I think to do a first project and to start with the first analysis often helps to find a way to do that. And that's why I'm happy to do what I do, and I like consolidations. Thank you very much.
Thanks very much, Hans, for summing it all up. And it's great, but we come back to the first point you made on the chart of accounts, right? And so you mentioned about the diversity, heterogeneity of the public sector, but also all the accounting principles. So made me think of an orchestra with all these different instruments. And obviously with we don't want to have a single instrument orchestra, but also then the relationship aspect to change management. So I think all these points, which are challenges in the private sector, are even more important in the public sector, right? Aligning that the materiality aspect, very important indeed. So let's not get lost in the details, but really focus on what matters and start with the change management aspect. Takes two to tango and some quick wins, very important aspects indeed. So thank you very much for sharing this. So we'll open up for questions to the public. Just before that, let me maybe ask one question to our panelists. There's a lot of talk about AI, the power of AI, and I think also the creative destruction of AI. I think the last Nobel Prize winners of economics, Philippe Aghion, just got recognized for all this work on this creative destruction, and it's quite disruptive. Lots of opportunities, however, also for us. So it'd be good maybe to hear from every panelist what you see as a main use case, because we also had at the ministerial CFR, those of you who were present will remember, also some warning about sometimes being distracted. And so it's good to have really clear use case to invest in AI to make sure that we have the return investment. But let me start maybe with you, Hans, if I may, trying to hear from you. What would be the one use case for utilizing AI and trying to address some of these challenges, and then we'll hear from the other colleagues. Thanks.
Yeah, actually, I said before, I'm an accountant, and I'm also an auditor, and we are using in our private sector audits AI since years. So we started to train our systems in analyzing the notes part of the financial statements. So 5 years ago or 6 years ago, we received those 100 pages notes parts, and we had a checklist, and some of our staff had to find out which part of the notes is related to which regulatory paragraph in the checklist. We are not doing this anymore. We are just putting it in our system, and our system is giving us suggestions which part of the notes is related to which part in the checklist, and if AI thinks it's right or wrong. And I think 80% of that are correct. But in the end, AI is not able at the moment to give you a 100% truth. You always need one who challenges what AI did for you. This is one usage we did. The other one is if you have a complicated accounting question, our chatbots are able to do a first analysis of the accounting question and suggest us a solution. And that's the problem for the auditor, I have to say, because AI is able to give you such a, let's say, good summary that you always think this is right. But sometimes it's written very, very perfectly, but the content is complete rubbish. So even here in the end, you always need someone with a knowledge to check what AI did for you. And this development is going on and going on and going on.
Thanks so much, Hans. Very encouraging, but also be mindful of the risk of hallucination. There's still a little bit of that. And at the end, it's really still a chartered accountant who signs off. Right? So it's still a human. So thank you very much. Paul, what's AI use case would you actually recommend?
In different process system, Korea IPSASB solution, we initially in 2022 we adapt some prediction models such as the GDP projection or treasury balance prediction model, but we found out that that's too big model to adapt. But now still, even though we are realizing that it's too big model to implement, but we are still ongoing to calibrate the errors or something like that. But now we are turning into the newer application of AI, such as generative AI, to implement the in the open fiscal data, which is a public portal for financial, the statistics and the information, so that the public can fully access, the disclosure, the financial statistics and information for their needs. So that becomes to enable the general public to utilize the fiscal statistics for their own use using AI. So this is what we are implementing right now. So I guess this function will be operational by the end of this month or the next month. So this is gonna be our current updated use case for AI into open fiscal data.
Thanks a lot, Paul. And I hope that it will also have automated translation so we can also use this chatbot. Yeah. Certainly very useful. Kuram, what?
So I think one of the things that I'm seeing around the world is a lot of hype about AI. Okay. So people want to do simple things with AI, which can be done by much simpler systems. So I generally want to cut the hype and try to have a problem-driven approach. You have a problem which cannot be solved by a simpler solution, and then you use AI. So what is the problem? There are several problems, but in the context of consolidation, I'll just focus on two. One problem is that you have IPSASB, right? It has all your MDAs and all your government financial data in it, which is like 60 to 70% of the data. But then you have several other entities which are not using IPSASB. And let's say you say to them that this is my unified accounting and chart of account structure, and this is my format of the trial balance, adjusted trial balance. You send me one trial balance report. Even if you say that, it will not be standardized. It will have a lot of differences. It will have differences of the format. It will have differences of the budget classification chart of accounts. So when you throw it into the system, which is a consolidation system, it will be confused, because it's not a consistent pattern. So that's the problem. So for that problem, between the system of the trial balance, which may be an Excel sheet, and the consolidation system, you can put an AI tool. AI tool with machine learning can see all these files and see whether they are consistent and standardized. And if they are not, then through machine learning, it can actually make it standardized and then throw it into the system so that you can make the consolidation easier. So this is one use case. The other use case is that let's say you have said that all the entities that you send me the file, right? What if they don't send the file, right? So because traditionally there is a central unit that calls them, oh, you have not sent me the trial balance, I need to consolidate, right? So then that's another problem which can be solved through the robotic process automation. Robotic process automation is a robot that can mimic humans. So it can virtually go into the system, multiple systems, fetch the report, the trial balance report that they might have already configured in the system at a regular intervals on the same date, on the same time, 500 entities at one time, just fetch the reports and pull it and push it and upload it into the consolidation system. So that's another use case that is very relevant, and there's a lot of RPA happening in UK, in USA, in many, in even Saudi Arabia, UAE. So RPA is another tool that can automate the flow of information, the trial balance reports from the various systems into the consolidation system.
Thanks a lot, and can help address the information asymmetry you have and resistance to change sometimes. Great. Ivona, I'm sure you're dreaming of an AI tool that will help you analyze the compliance with IFRS standards. But what is the main AI use case you would recommend? And then let's open up to the...
Well, I think that I don't have such tools, yes, but because actually I'm not quite sure how AI tool can help on the numerical identification, because the AI tool which we are using is based on language models. But in any case, even comparison, because I was doing some comparison of the financial statements for some sectors. It was in the railway sector. So you have infrastructure and operator, cargo, passengers, and maybe some other subsidiaries. And then even within this one set of industries, we have major differences. These were not in the group, but these were under single control, and still there was a variety in application of IFRS, because they didn't have one common accounting policy. So with this tool, I would dream to have to prepare like a quasi-consolidation, because it was not required under the joint control of the state, yes? So such tool would be really very perfect, because the idea was to have one overview of what transactions are actually with external customers, and what is the overall balance of subsidy taxes with vis-a-vis government. So whether the government is paying more, or it's SOEs which are contributing to the state in one on another level. So such tool is a perfect. I don't have such tool for now.
I see some colleagues in charge of financial oversight of SOEs nodding. So indeed, I think they may be interested in that as well. But let's open up to the floor. Any questions, comments? Mike, happy to give up this.
Thank you for the great presentation. I'd be interested from your experience, what's your view on, let's say, developing as a government, as a country, your own system, going more into the direction of open source versus commercial systems where you may also have to have the licensing fees over time. Is it possible, is it desirable, both from a functionality and cost perspective, to develop your own system, or would you advise to go with more off the shelf solutions? And maybe also to Paul a little bit to understand better what's the setup in Korea in this regard. Thank you.
Thanks, Emmanuel. Yes, so Karam and Paul.
So it all depends on the context. We went to Ghana and they said ERP system, and if you don't talk about ERP, you don't have a seat on the table. We went to India, they say no ERP system, custom developed system. If you talk about ERP, you just get lost. So it's a very sensitive topic. From the bank perspective, our job is to give them pros and cons of each technology option and let them make a decision, right? So what is the decision parameter? The decision parameter should be that it should be a system that meets your requirements, should be rooted in your requirements. Forget about technology, okay? And then it should be the cheapest system. If it meets your requirements, it's the cheapest system. So what do I mean by cheapest? What I mean by cheapest is the total cost of ownership over maybe a relatively long period of time, like 7 years. So you do the calculation and then see, what is cheapest. We did an analysis. Ali Hashim did an analysis a few years ago, and he analyzed all the IFMIS system, I think 100 plus IFMIS system that the bank supported over the last 30 years. And he concluded that actually custom developed was slightly more expensive than ERP systems, because there are a lot of hidden cost in the custom developed system, and which just is not visible upfront. You have 4 or 5 programmers, and then they start, and then over time you have, in Bangladesh, 200 programmers. In Mozambique, you have another 200 plus programmers maintaining the system. It's a huge cost that just aggregates over time. So to cut it short, I'm slightly neutral to this. It's a very context specific. But the basic parameter is the total cost of ownership over, let's say, 5 to 7 years. And then it should meet your requirement and be mindful of the context. context is very, very important. In different contexts, you might have a very, very different solution. So be mindful of that, like I gave you the example of, and most of the European countries, by the way, they are using ERP systems. They are using SAP because SAP is in Germany and they have a better marketing overreach.
Don't look at me. I'm conflicted. No, but also I would like to mention also Hans's point, which is depends also on the functionality, right? So you don't need to buy all the bells and whistles. And oftentimes countries pay licenses for functionalities they don't need, they don't use. And also sometimes the hidden cost of some ERP systems in terms of data transfer. So it's really being really mindful of what one needs is important. I think, Paul, in your presentation said you started with vendors and you're home to Samsung, so that helps also. But then you shifted to in-house, no? So it would be good to hear from you.
I think this is a very tricky question because we are asked, which is better, either the ERP core solution over custom or the local development solution. So when we developed the third generation of IPMIS, which was the D-Brain, the previous version, we are considering also whether we would implement ERP or custom developed software, because at the time that there are so many issues, because we are transferring from cash basis to accrual basis, so there is no such the IT the company to experience to develop the accrual based accounting system in Korea. So. But there are one, the opinion from the government, Minister of Economy and Finance. They are considering that it's kind of in order to boost IT industry, it's better to give the opportunity for local IT company like Samsung, LG to participate in developing custom software. So it's not only for IPMIS, it has some tendency for other the government application as well. So the Ministry of Economy and Finance finally decided to implement the custom software at that time. So and there are so many the pros. I mean the strengths if we implement custom developed software, such as the IPMIS. We have experienced a lot of changes in the legal the terms. Even that there are so many new reporting the requirements are coming every day. So in order to encounter these kind of changes in terms of legal aspect as also functional aspects, we are accommodating this kind of change into custom software. So this is one of the benefits. But as the Kuram mentioned, that we have to be depend on the context first, and also there are other aspects as well, like culture things is very important. So in the culture, there are certain the organization to adapt. Even though there are some certain changes in the requirements, ERP can also accommodate, right, without any other change. So it depends on the situation, including context, even the culture, and also even the policy from the government, etc.
No, absolutely, and that's oftentimes the discussion, right? So, do you want to fit the body in a suit, or do you want to tailor the suit to the body? And so, depending on how many legs the body has, right? But let's open up also for other questions on not only on the ICT parts, right? On the how-to, it's a how-to panel. So you heard about the challenges, now is the solutions. Oh, it's all clear. Oh, we have a question here. Great. Yes, Kram.
Yes. As I mentioned in my presentation, there should be a separate consolidation system. Okay. It should not be an IFMIS, because IFMIS is a transaction processing system and consolidation is a reporting system. If you put the consolidation in IFMIS, it will have a lot of load on the IFMIS transaction processing. It will degrade its performance. And it's not suited for consolidation because, as I mentioned, there are a lot of year-end processes that are happening in the consolidation system. So when you are developing a separate consolidation system, separate from the treasury system or separate from the payment system, be mindful of the few functionalities. It should be able to do the inter-entity clearing. It should have a general ledger. It should be able to aggregate the hierarchies and various budget execution reports, warrants, allotments. It should be able to maintain partner, what we call trading partners. So between the two entities, there is a inter-entity clearing. So those are maintained as trading partners in these systems, and then it can automate at least large number of transactions, if not all. There might be some complex transaction that might need some manual intervention, but if you configure the rules between the trading partners and have a properly configured chart of accounts for those inter-entity clearing items, then these tools typically support those functionalities. Similarly, currency conversion. As part of the year-end closing, you have certain loans which are in pounds or US dollars, and then you want to convert them to the local currency. And then there is an appreciation or depreciation of those currencies, and so the losses or gains on currency conversion. So these are all year-end processes that these tools support. They're slightly different from IFMIS. So yes, my answer is that there should be a separate system, and you can have a separate system for consolidation.
Thanks a lot, Kram. Any last question? Aman?
Thank you for excellent insights. And my question is about, again, these two tools, because of course, Excel is explored and Estonia demonstrated quite that Excel can be also used for consolidation quite successfully. But we're talking about consolidation tool and data warehouse as a bigger. Can you just elaborate for the participants what is the difference between those two and how, what is, and you were, I mean, yes, Ram or Paul, both, just why you propose consolidation tool instead of the data warehouse thing?
Yeah, as I mentioned, consolidation requires a general ledger and support for inter-entity clearing and a lot of other closing procedures which are not supported by generally data warehouse. Data warehouse is an analytical tool for other reports. So if you, there are some countries, by the way, who are using data warehouse. Even in the private sector, they are using data warehouse, but that's mostly aggregation. And inter-entity clearing is largely a manual process, so they have some way of doing the inter-entity clearing. So data warehouse has a different function. It can triangulate data from multiple sites. For let's say you have a KPIs on health and education or whatever. So you want to see how much money we are spending on KPIs. So you have a budget information and you have non-financial KPIs. You can triangulate this information and produce analytical reports. Similarly, let's see there is a report that says what is the cost of vaccination per person in district A, B, and C. You have, like, let's say 70 districts, right? So it's a complex information. You have budget execution expenditures on vaccination, you have whatever ways, and then you have district-wise disaggregation, and then you have this analysis of how many people. But how many people is a non-financial information. How many vaccines is a non-financial information. It's a KPI, right? So you want to have the financial information together with the performance information to see that comparison. So these kind of analytical reports are more suited for a data warehouse. That's why if you look at the architecture of most of the ERP systems, they would have a separate consolidation module, like SAP has BPC, Oracle has Hyperion, and PeopleSoft has its own version just for consolidation. And attached to that, there's a separate data warehouse. So that's the reason in my diagram, I said you need data warehouse for analytical reporting, a lot of decision-making reporting. But for consolidation purpose, it's a small module. It's just a general ledger, and then it has some inbuilt functionalities. So that's the difference between a consolidation tool and a data warehouse tool. A few years ago, there was a survey done in the private sector, and 76% of the private sector in USA at that time were using a consolidation tool, and the remaining were using actually data warehouse for consolidation purposes. But it has its own limitations.
Thanks a lot, Karam. Okay, so last question, because we're standing between the lunch and you. Thanks a lot for this question. I think may turn to you, Hans. I think you alluded to that, the compatibility of the standards. And
so a lot of questions. And thank you for your question, because you raised a very important point. I tried to answer all of them, but I'm not sure if I forget one. Actually, my view is an accountant is able to understand different settings. So an accountant is able to understand a local gap, and he has to train, let's say, IFRS, but he has the knowledge to understand what IFRS is. And if he understands IFRS, he also understands IPSAS. In most parts, IPSAS and IFRS are completely, from the content, the same. They have just a different goal because IFRS are for stakeholders, listed companies. IPSAS have some other aspects included for the public sector, but from the basic, it's comparable. And if there is lacking of guidance in IPSAS, you can use IFRS and the, let's say, documents prepared to IFRS to understand and fill the gaps. And from the consolidation aspect, consolidation is for me always the same. It's not depending on local GAAP, IFRS, and IPSAS. You have some special variety in using, let's say, fair values or something like that, but from the core technique, it's the same. Yeah. And so from our perspective, we have countries like Switzerland and other countries doing a very good job in using IPSAS, yeah, and accountant from the private sector and the public sector have a very good exchange in that. So I think IPSAS is a really a perfect idea to get let's say a fitting border and a closed system for the public sector, so everyone can use it. Yeah, and we do not have the variety in the public sector anymore, and we see much more and more countries that are interested in using IPSAS. Yeah, so I'm really honest. I'm not sure if I answered all your questions, but that was my thoughts. But we can discuss it afterwards if you want.
Thank you very much, Hans. So I think that's with this. So let me conclude then this panel by also mentioning you that you have actually the dessert on your table. It's the latest PULSAR publication, a guidance on good practices in public sector financial reporting and fiscal transparency. We want to go green, so you just have a leaflet with a QR code, so you can download there. But there's also many other resources on the CFR and PULSAR website, including the note on consolidation, so many more resources, as we couldn't address all the details today. But with this, let me thank this eminent panel for sharing their knowledge and invite you for lunch. Thank you.
Just to check if Peter can hear me. Peter is connected, right? Okay.
Yes, I can.
Excellent. Peter, would you like just to unmute? So we just confirm that we can hear you as well.
Yes, yes. So
excellent.
Can you hear me?
Yes, hear you very well. We don't see you yet, but we will see you when. Thank you for joining.
But my video is on at the moment. I can see myself on video.
Okay, technician says all is good, so we'll also see you shortly.
Okay, thank you.
Yeah, go ahead. Sunjin connected, right? Sunjin connected? Yes, connected. Great. Thank you. Friends, let's move forward. And now, as usually we do during our PULSAR events, is to get an update of what's going on with global developments and with regional development. Specifically, we are going to hear back third time from Ross, this time but specifically on IPSAS. What's happening on IPSAS side? What are the progress made on the IPSAS side? Then we have Peter Littma, who is IPSAS expert group representative and lead, who will share what's going on IPSAS. Last week there was a very interesting and insightful meeting of IPSAS expert group in Rome. And then with Dmitry and Sungjin will update us on the sustainability reporting paper we have recently developed under the PULSAR jointly with KIPF. So this is our plan. So Ross, the floor is yours.
Thank you very much, Armin. And Thank you for the opportunity to join today and speak about the IPSASB standard setting work after a great discussion over the last couple of days on consolidation. I think yesterday this shift was described as the graveyard shift. Right after lunch, people are full. So thankfully, we've got a very exciting topic on standard setting to wake everybody up. So I'm very excited to walk you through some of the recent progress at the IPSASB in terms of our standard setting activities, as well as a few things to be aware of that are upcoming in terms of consultations and new standards that might be of interest in your jurisdictions. Before I move on to that, I just want to highlight the photo you can see on the screen is of downtown Toronto. Our new office is very close to this exact photo. If you're ever in Toronto for any personal or professional business, please make sure to let the IPSASB know and drop by our office and say hello to the staff team. I'll start by just doing a quick overview of our work program and the main items, main major projects on our work program. So we do have a fairly full work program at the moment, and we're coming to critical stages in a couple of key projects in terms of finalization of long-running projects, as well as key consultations that I'll speak about. I won't go through all of these in detail, and some of them I'm going to cover in a little more depth in the coming slides. But what I do want to show here is that all of our projects do have a public sector specific focus. And in every standard we're developing, whether or not we're building off of private sector guidance from IFRS or ISSB, we do apply the lens of our public sector conceptual framework against all of the principles we're bringing over to make sure they work in a public sector context and that we deal with the public sector specificities and terminology examples in an appropriate way so the standards can be applied in the public sector. So as you can see, all of the projects we have a public sector focus. And alongside that, we also try and strive for international alignment where it makes sense. So where there is a private sector or another international standard that we're trying to align with, we do always try and maintain that alignment to reduce any unnecessary differences for the sake of being different. The green boxes at the top, those are our two sustainability related projects that are ongoing at the moment. I'll speak a little bit more about the climate related disclosures project in the coming slides, but I wanted to highlight that we're already working very hard on implementation support material on materiality, building off of guidance already created for the public sector around the implementation of ISSB, IFRS S1 and S2 on how to apply materiality and sustainability related disclosures. So that's an ongoing non-board related project, so it's staff led, and we're looking to move very quickly to develop that type of guidance to support our first sustainability standard, which we expect to publish very early in 2026. But I'll speak about that in a little bit more. The next project down, and the first major project I want to talk about, is our public sector specific project on developing guidance for our tangible natural resources, which is a new standard for those tangible natural resources that are held for conservation purposes. And when the objective of your entity in holding that is to conserve those for future periods for their service potential, we're providing a full standard with recognition and measurement guidance as well as disclosures that can be applied to account for that. And again, this is clear, specifically public sector specific, and we're planning to approve that guidance in about 2 weeks at our New York board meeting at the first week of December. And this is a project we've been working on since late 2018. So we're quite happy to be bringing this to an end, and we hope this will be applied widely once it comes out. And I'll just talk next about our presentation of financial statements project. So this is a project where we're working to develop a more broad-based consultation paper that we're hoping to finalize in Q1 2026 that will explore different reporting concepts around presentation in the public sector. Also bringing into this consultation paper is the recent publication of IFRS 18, the new reporting standard for presentation in the private sector, and some of the new concepts there to test whether those might work in a public sector context. So if that's of interest to you and you're thinking about the look and feel of your financial statements, please keep an eye on this project. The last point I want to make on this slide is the very last line here. Just over the summer, we've launched a new portal on the IPSASB website where you can now provide fact patterns and questions on specific application of standards issues directly to the IPSASB. And we've set up a working group called the IPSASB application group that will go through the technical queries and provide feedback back to the query question provider, as well as consider whether any of those queries give rise to any questions on the guidance and the standard that need to be updated, and potentially start either narrow scope or other major standard setting projects. So this is a link that we've now built out where you'll be able to bring your questions directly to us in real time to share the challenges you're having in applying the standards. If you have any questions about this, please grab me after the session. I'll show you where to find this on the website. It's pretty straightforward, but if you've never been on our website, I can save you a bit of time. So moving along, I did want to move to our major sustainability related project, our climate disclosure project. This slide here outlines the key proposals from our exposure draft at the end of 2024 that was out for consultation until Q1 2025. And our standard setting in this space started with the international agreements that most countries around the world have signed up to, the Paris Agreement and the UN SDGs. And when the board started setting standards in this space, it did so from the perspective on ensuring that the information provided in these reports was helpful for both transparency as well as accountability in whether countries are actually taking the actions as set out in the agreements and putting programs in place to apply the agreements, as well as to have information that's useful for better decision making and related to financial management, related to achieving the goals in these agreements and having the fiscal space needed to appropriately make the investments and changes needed to put the promises into action coming from these agreements. We received the highest amount of response we've ever received to a consultation from this particular document. We had almost 800 participants in regional roundtables from around the world that we attended that gave us direct feedback on the proposals. And we had 96 written comment letters that have provided feedback on that proposed standard. And the board's been working hard at going through all of that feedback since April of this year. And we're now well on our way to turning that feedback into final standards. But there's a few key things I'll highlight on the next slide, the decisions the board's made in responding to that feedback. Firstly, the proposed guidance last year had two distinct and separate reporting perspectives in a single standard. The feedback we received is that was quite challenging from a practical perspective to apply. So one of the reporting perspectives on providing climate-related risk and opportunity disclosures on an entity's own operations, which would be applicable to most entities, and then the more specific reporting on climate-related public policy programs, those specific actions put into place to achieve the agreements as put in place and signed up to by governments, was found that there's some asymmetric application of those standards, and a lot of our respondents were telling the board that they were really struggling to understand when they would apply the public policy programs guidance. So the board took a decision in June of this year to split the projects into two separate phases. The first phase, we're working to finalize now, and we'll be approving in 2 weeks' time at our December meeting. And that's our standard on climate-related risk and opportunity disclosures on own operations. The board's made all of the major decisions in that project now around materiality, using the GHG protocol for your GHG inventory, and other changes we've made, such as additional transition provisions in above and advance of the private sector transition provisions. So the board will be doing the final review in a couple of weeks, and we highly expect approval of this standard and issuance of it in early 2026. And then the work will continue on that project to deal with the public policy programs part of the standard and issue the second IPSASB SRS standard, hopefully by the end of 2026. And I just wanted to say a special thank you to the World Bank and the Umbrella Trust Fund in particular for the additional resources that have been provided to the IPSASB staff since the inception of this standard setting project a year and a half ago. It's really allowed us to move with greater pace than we have ever on any of our standard setting projects. On this challenging project in particular, where we needed to go around the world and talk to many different groups, the World Bank cooperation and support has been invaluable to us. The next thing I wanted to highlight is we've just published, literally in the last 10 days, our next work program consultation. And this work program consultation is getting ready for the additional space that'll be available in our work program in 2026 and beyond, and asking constituents around the world, what should the next priorities be for the International Board in terms of financial reporting as well as sustainability reporting? It's an open consultation, so the board's given a list of projects it could do, but no preference on which projects it might do, and rather left it open so that constituents can let the board know what are the greatest priorities for them. And then the board will look at the feedback and consolidate that and apply its judgment based on the resources available and the top priorities. And by around this time next year, let constituents know what those next work program priorities will be. As you heard yesterday, and you may have already known, we're getting a new chair starting next year, Thomas Muller and Marcus Berger. And this is being set up so that as Thomas comes on board next year, we're getting the feedback to this consultation, and Thomas with the board in 2026 can review that feedback and as a board make a decision on what those next priorities should be. And next, within the last few months, the 2025 status report on the Public Sector Financial Accountability Index has been published. It's available on the IPSASB, IFAC, and CIPFA website for anyone who's interested. It captures the feedback from 169 countries surveyed on their progress towards accrual adoption and whether they're currently on cash, transitioning to accrual, or on full accrual. This is the latest update since our 2020 last survey. And I wanted to thank countries in the room that took the time to provide their feedback to the survey, and the PULSAR team for helping us get more information from participants in the room. What we found overall, I'll talk about in the next couple of slides, but I am running out of time, so I'll move relatively quick. We are still seeing the upward trajectory towards accrual overall, but not quite at the pace that was predicted in 2020. I think we're seeing a bit of a drag from the pandemic itself, slowing down a lot of transition projects. I think we're also seeing the drag of other factors influencing the pace of movement to accrual. Happy to say, though, overall, the trajectory is still positive, and there's many jurisdictions that are showing progress on that transition to accrual. And more we're seeing those countries moving to accrual using IPSAS either directly or as part of their national frameworks. And the last slide I wanted to talk about here, a really positive development we're seeing this time, is in 2024, most of the jurisdictions on accrual were high-income jurisdictions, and there's no low-income jurisdictions on accrual. But if you look at the projections we've picked up to 2030, you'll see that really start to shift with the next wave of countries that move to accrual, with 60% of the countries on accrual projected in 2030 to be middle or low-income jurisdictions. And for the first time, we'll have low-income jurisdictions fully applying accrual accounting. And I think this is a real point worth noting. And further, we're continuing to see that uptick of use of IPSAS in accrual reporting, where as of 2030, we're projecting that 81% of countries reporting on accrual will be using IPSAS in some way. With that, just want to thank you for your time, and very interested to hear the rest of the presentations and answer any questions.
Thank you very much. It was, as always, very informative, including on the progress done and the plans of IPSAS board, sustainability reporting standards. Many in this room expect the standards to be issued, and we will have a separate, as we discussed, potentially separate virtual event, webinar at the end of January, just to get an update of what was issued, and then we'll move forward. So now, Peter, the floor is yours to give us update on the European Public Sector Accounting Standards project.
Thank you very much. Can you hear me?
Yes, very clear.
Very good.
Please. Thank you.
Thank you. So good afternoon. I am Peeter Leetmaa, EPSAS team leader at Eurostat. And I would like to thank you very much for inviting me to update on EPSAS, or European Public Sector Accounting Standards Initiative. And I would like to ask you to move to the next slide. Thank you. So 4 slides in the beginning of my presentation are on EPSAS background. I will go over them quickly, as my colleague John Verrinder already presented the background at the WorldBank CFRR PULSAR meeting on 17th of March this year. So this first slide is on the Budgetary Frameworks Directive, where it all started following the financial crisis. And next slide, please. And this slide shows the aim of the initiative. Again, I'm not going to read it out, so I leave it on for a few more seconds, and then I think we can go to the next slide. And here is the so-called 2-phase approach, aiming first at promoting accruals in public accounting in the member states, and then addressing the comparability in the EU in the second phase. And then a couple of links to the progress reports as well on that slide. And then the next slide, please. And finally, on the background, here is the slide showing the 4 EPSAS work streams: communication, technical work on EPSAS, cost-benefit considerations, and various support to member states, technical and financial. So, and then let's go to the next slide, please. Thank you. So now I would like to continue with the current EPSAS topics. I start off by saying that lately much focus has been on the Commission report on public accounting in the EU that we should publish before the end of this year. So I will come back to this report in a few minutes. Now, concerning other activities, the EPSAS expert group discussed the new IPSAS 47 and 48 on revenue and transfer expenses in November last year. And that meeting in Dublin was held back-to-back with the Irish national event, focusing on their public accrual accounting reform. And in fact, this month, in November, so just recently, we had a similar national event in Rome, which was preceding EPSAS expert group meeting called International Seminar, Accrual Accounting in the Public Sector. And then after this national event, we had our meeting where we had 2 technical issues discussed, which are on presentation of financial statements and accounting treatment of military equipment and defense-related expenditure in the EU context. So the paper on presentation of financial statements in the EU context was linked to the currently ongoing project of the IPSASB on presentation. And this and other papers are publicly available on our EPSAS website. Next slide, please. Here I would like to stop for a moment on the paper and discussions on treatment of military equipment and defense-related expenditure in the EU context. So this paper aimed to provide a comprehensive analysis of the accounting treatment of military assets and defense-related expenditure under international and national frameworks. The paper also aimed to analyze links between financial reporting and statistical reporting. In particular, how government accounting interacts with macroeconomic surveillance under the EU excessive deficit procedure, the EDP, and NATO defense monitoring. So the paper addressed various practical application challenges and issues faced by preparers of financial statements. One of the key challenges is balancing confidentiality with transparency of defense data. So the ultimate goal of the paper was to provide a robust basis to enhance consistency and credibility of financial information on military expenditure and assets. DG ECFIN, our colleagues in Brussels, complemented the contractor's presentation, the paper and presentation, by explaining the treatment of the defense spending in the EU fiscal framework by focusing on the national escape clause related to defense expenditure. So these national escape clauses were opened for a number of member states recently. And after that, the reforming country, Greece, so a country that is undertaking the public accrual accounting reform, which also has a large defense expenditure, looked into the matter in the national context. So their presentation looked into the current, but also future IPSAS-based accounting treatment of military items and development of the relevant registers of assets and inventories, which is a major part of this project. And presentation and sensitivity was among the challenges, as you can imagine. So to continue with presentation and sensitivity, in the discussions during the meeting, a representative of one member state said that for this particular reason, they do not record military assets on government balance sheet. And the other major challenge that was addressed in the discussion was, for example, on difficulties of recording long-term weapons contracts. Next slide, please. And as I mentioned before, here I come back to the Commission report on public accounting in the EU that we should publish by end of this year. And here on this slide, you see the mandate for that, or the requirement introduced in the legal act. Next slide. In fact, the 10 pages or so long Commission report will be accompanied by a longer staff working document. So there will be, effectively, there will be two reports, the main report and the accompanying staff working document. And here I would like to stress that the report is currently undergoing validation within the Commission. And most importantly, the College of Commissioners should adopt it, but has not yet done so. So this is like a disclaimer that what I will tell about the report is about the report that hasn't actually yet been validated. So next slide, please. And here is the structure of the report. So 5 chapters. And those of you who have seen the 2024 EPSAS progress report know that chapters 2 and 3 of the Commission report on public accounting in the EU are very similar to that progress report. And I'm not going to stop on chapter 2 about Commission's work, as it elaborates on the 4 EPSAS work streams that I showed in an earlier slide. So next slide, please. And now instead, I will stop on the main points of chapter 3. Here we can see that public accounting of most member states are already on accruals. So most meaning 14 out of 27. And 5 countries are set to do so by 2030. 8 member states do not plan to implement accruals across general government sector by 2030. And now about the definitions or what is accruals and what's not. So it can be said, or by convention, at least in European circle, that a country follows accrual accounting when its accounting maturity is at least 70%. And those accounting maturities are accrual accounting progress scores assessed in relation to IPSAS. So IPSAS is used as a benchmark in this assessment. And we have made this kind of assessments several times since 2014. And then you will find accounting maturity tables on as of 2025 and also the forecast for 2030 annexed in the end of this slide set. So I hope it will be circulated later on so you can look at the detailed figures. So this information about accounting maturities is, I would say, something similar what Ross showed before about the accountability index, but expressed in numerical terms. And it's important to add, in absence of EPSAS, all countries undertaking public accrual accounting reforms used or plan to use IPSAS as a basis for developing their own standards. Next slide, please. And as I mentioned, the reforming countries, here is a separate slide on this subject. So as you can see, 6 countries listed at the bottom of this slide expect significant increase in this mentioned accounting maturity by 2030. Next slide, please. And the 4th chapter of this Commission report addresses the suitability of IPSAS as a common public accounting framework in the EU and the potential use for developing EPSAS. This IPSAS suitability assessment chapter comes in 3 parts: evolution of IPSAS since 2013, when we had the last Commission report, screening of IPSAS standards on the suitability for developing EPSAS, and then survey results on suitability of IPSAS for member states and their potential use for developing EPSAS. My colleague, John Verrinder, presented the results of that survey at the WorldBank CFRR PULSAR meeting in March this year. So I don't need to show this again, I think. And the main conclusion on suitability of IPSAS is that although some concerns set out in the 2013 Commission report, or the IPSAS 2013 report, as we sometimes call it, still remain, they have diminished over time. The suitability of IPSAS as a reporting framework for member states and the governance of that framework have improved significantly since the 2013 report. So last but not least, on chapter 5, which is for which there is no separate slide here, sets the way forward for the project. And here we can say that in the light of the progress made by the Commission, by the member states, etc., the EPSAS initiative will continue in phase 1. So I mentioned the two-phase approach before, focusing on encouraging and supporting national modernization efforts to increase transparency in the general government sector. So staying in this phase 1 in practice means that no further development of EPSAS framework and no legislative proposal are foreseen at this stage under this commission or this commission term, which is 5 years. Whereas from 2026 onwards, there will be one EPSAS expert group meeting per year instead of the current 2 meetings. But as I said, at this stage, under this commission, this means that here I would like to recall the disclaimer that the report is currently undergoing the validation within the Commission, and the College of Commissioners should still adopt it. So next slide. And here I'm not expecting you to memorize all these figures here, but this is the table that I mentioned before that is annexed, that you can look at later on the maturity, accounting maturity figures. So this is about 2025. Next slide, please, is about the forecast for 2030. And thank you very much for listening, and I'm happy to answer any questions you might have. Thank you.
Thank you very much, Peter. Thank you for the update. So applause for you, and also thank you for just update on the recent developments also on military expenditures. I think expenses, this was very important for broader developments, so the PULSAR is in the loop to understand where the European Union interests are, and also just the progress you have indicated. 14 member states out of 24/7 are already on accrual, and 5 more are planning to be on accrual by 2030, which is quite a strong progress as well. Just because you are online, any questions from the audience for Peter? If not, then I will pass the floor to Dmitry, please.
Thank you, Arman. Good afternoon, everyone. Yes, so hi, Sunjin. Thanks for connecting. I know it's already late in South Korea, in Seoul. So the main objective of this presentation is to share with you the final findings of our latest joint knowledge product developed between by the PULSAR and Korean Institute of Public Finance on the sustainability reporting. You may remember it's the second of the series of the knowledge products on this topic. And in this occasion, the title is Sustainability Reporting, Implications for Public Sector and the Next Steps. And basically what we try to do is building up on the findings from the first report. We updated the international sustainability reporting related framework. We presented the recent developments, both in public and private sector, and also discussed briefly what is going on in terms of the international adequation standards related to sustainability reporting, and also international auditing standards on these topics. Then we dedicated a specific chapter to overview experience of 4 countries, and Sunjin will go in details for each of these 4 countries: Brazil, New Zealand, Switzerland, United Kingdom. And finally, what we try to do is come up with a series of recommendations and implications related with the decision to implement the sustainability reporting. And special thanks to Andreas Bergman and the team of Zurich University of Applied Sciences, who was part of this research, of these initiatives. And also we hope that based on these findings, these recommendations proposed, the next step, also working together with Andreas' team, would be to put together the readiness assessment methodologies that I mentioned yesterday, specifically for sustainability reporting in public sector. But going forward, also what we are looking at is to come up with a kind of a standard roadmap template and action plans that the country will have to develop internally once the decision in terms of implementation of sustainability reporting is made at jurisdictional level. So this is the ideas we have for the futures, and we hope to share the progress with you in the upcoming meetings and workshop, in PULSAR workshops. Sunjin, I will pause here and pass the microphone to you.
All right, thank you, Dimitri, and thank you for having me here. Well, although virtually, even though I'm not at Vienna now, but I can see some of familiar faces in the audience. So I'm glad to see you, you guys, colleagues again. And let me start with updating you about the recent development at the international level about sustainability reporting in the public sector. And Ross already covered about what's happening in terms of standard setting for public sector specific sustainability reporting. He already mentioned about SRS exposure draft published in 2024 and recent decision by the board, IPSASB board, about splitting standard. So I'm gonna skip this part and move on to next slide to update you on what's happening in the other areas of accounting field related to public sector sustainability reporting. First, there is a progress made on assurance side. So assurance standard is made. So IPSASB finalized and issued a very first standard on sustainability reporting, ISSA 5000, on general requirement for sustainability assurance engagement that's published in 2024 and effective on or after December 15th on 2026 next year. So it's coming. This again, one thing I want to highlight is this is private sector assurance standard, and that actually goes along with IFRS S1 and S2. But interestingly and importantly, public sector also goes along with this development in terms of assurance standard setting. INTOSAI Working Group on Environmental Auditing, WGEA, recently issued a guidance on environmental auditing, issued in last September. And that new guidance on environmental auditing is actually updating and merging of 3 INTOSAI guidance. Guidance 5200, Activities with Environmental Perspective, and Guidance 5201, Environmental Auditing in the Context of Financial and Compliance Audit, and INTOSAI Guidance 5203, Cooperation and Audit of International Environmental Court. So those 3 guidance were kind of merged into this new guidance on environmental auditing. And that guidance actually covers entire audit stages, started from planning, conducting and reporting and follow-ups. So that's a brief but comprehensive package for public sector assurance for sustainability reporting. And along with this assurance side, education standard is also updated. So IFAG also updated IES 2, 3, and 4. IS 2 is technical, about the technical competence. IES 3 is about professional skills, and 4 is about professional value, ethics, and attitudes. These are kind of global minimum education standard for aspiring professional accountants. And what's new in this update is 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 trying to infuse more of system thinking of linking sustainable reporting to financial reporting. So those two are not a separate one, but sustainable reporting should be considered along with financial reporting. So that's new innovation in this education standard. And next slide, please. So having these kind of international development as a backdrop, we're trying to look into what goes on in the practice of sustainable reporting in public sector. But given that public sector sustainable reporting standard is developing, but not full-fledged yet, we decided to look into voluntary but only practice of public sector sustainable reporting. So we choose 4 countries: Brazil, New Zealand, Switzerland, and UK, with specific intention. Let me elaborate more on the selection. But anyway, so when you take a look at the timeline of developing this country-specific sustainability reporting practices, it starts from very early in 2005, which is case of UK. They started sustainability of government and state. But back then, this sustainability is more about financial or fiscal sustainability. And also a Swiss government started issuing a fiscal sustainability report in 2008. But also this is about fiscal sustainability rather than environmental or other climate-related sustainability. But in 2021, Swiss government started incorporating the climate-related element in their fiscal sustainability reporting. So Switzerland is the one preparing their fiscal sustainability reporting following IPSASB's RPG1, even though they are not explicitly claiming that they are adopting RPG1, but their fiscal sustainability report issued by Swiss government are pretty much in line with the requirement or the disclosure requirement of the RPG1 of IPSAS. So anyway, in 2021, Swiss government started incorporate some of climate-related sustainability information in their fiscal sustainability report. But in 2021, those information were kind of positive. But in 2024 report, they actually start including the quantitative information, impact of climate change on their fiscal numbers. So this is kind of development in terms of sustainability report, starting from fiscal sustainability, but evolved into incorporating more of climate-related or other environmental-related sustainability information in their fiscal report. And there are 2 countries, New Zealand and Brazil, also selected in this case studies, country-specific case studies, partly because New Zealand provide client-specific fiscal analysis report, and also Brazil also provide unique aspect about public sector specific sustainability reporting. So let me elaborate these country cases one country at a time. Next slide, please. Let's start from Brazil as the first country case. In case of sustainability reporting in Brazil for the public sector is driven by Sovereign Sustainable Bond Framework, SPBF, is guiding framework for Brazilian practice. And Brazil issues 2 kind of reports related to sustainability reporting. First one is pre-issuance indicative resource allocation report. So this is report issued before issuing sovereign green bond. And the second one is allocation and impact report. This is report issued after issuing sovereign sustainable bond. Why Brazilian government issuing this report? Because they want to provide more information, try to boost up their transparency in terms of issuing and use of the proceed from those green bond. So they're trying to increase transparency on the allocation and reported results from the using those proceeds coming from the green bond, and also try to cover and select as issuance and selection of eligible programs. So what kind of budget programs they actually use from the issuance of the green bond. Try to provide more information about those use of proceeds from green bond to the budget programs, and provide allocation details, and also non-exhaustive indicator list of actually expense categories, especially certain budget programs, but what kind of expense items those proceeds from green bond is actually used. The Brazilian government is trying to provide that kind of information related to the green bond issuance. They're trying to make sure the money raised from the green bond issuance is actually used for the promise for the more sustainable project. So this Brazilian case is selected for this country case studies because this is a country case demonstrating, quote unquote, use of the proceed kind of reporting approach. So a sustainable report is issued specific for the issuance of green bond. So this is case of Brazil about green bond issuance and issuance of sustainable report for before and after the green bond issuance. Next slide, please. Let's move on to second country case, which is New Zealand. New Zealand sustainable reporting for the public sector is concentrated on climate, economic, and fiscal assessment, CIPFA, published in 2023. So this is, in New Zealand, there is climate standard actually issued by External Reporting Board, XRB, of now each standard setting authority for sustainable report is actually delegated to Sustainable Reporting Board, SRB. But anyway, back then, and in 2023, XRB was in charge of standard setting for climate standard. But those climate standard is mainly for private sector. But for public sector entities who want to engage with capital market activities, have to comply with those climate standards. So kind of related to public sector as well. And also this climate, economic, fiscal assessment, CIPFA, is public sector specific disclosure about climate-related sustainability information. As I mentioned before, ERB standards mainly about financial market activities of the private sector entities, but also apply to public sector entities as well. And more importantly, Ministry for Environment in New Zealand is considering extending this disclosure requirement and make it as mandatory for public sector entities as well. So we need to keep an eye on the development in New Zealand as well. Then how the New Zealand climate-related disclosure framework is made? Actually, New Zealand is adopting and utilizing multiple of international frameworks, starting from TCFD framework. They adopted TCFD frameworks risk classes, fiscal and transition risk, and also adopted and utilized a framework from Network for Green Financial System, which is promoting the Paris Agreement goal, and also using and utilizing framework of UK OBRs, Office of Budget Responsibilities framework for fiscal sustainability analysis, and also framework proposed by Helsinki Principles of the Coalition for Finance Minister for Climate Action. So these are the frameworks they are using and adopting to come up with their own kind of a framework for climate-related reporting. And why New Zealand government is trying to push this agenda forward? Because they feel pressure from the private sector development in mandatory disclosure of climate-related or sustainability-related information, and as well as national climate change risk assessment also. So these are the one forming political support and for this climate disclosure, and also large demand from the capital market as well. Why we choose a country case of New Zealand? Because New Zealand is the one showcasing specialized climate reporting, more focusing on economic and fiscal implication of climate change. So this is different from case of Brazil. So we look into this case of New Zealand. And next slide, please. The third case is from Switzerland. Switzerland is the one issuing fiscal sustainability report. Well, actually, this is a long-running kind of series starting from 2008. And 2008, the fiscal sustainability report was studied as long-term analysis of public finance. But like I mentioned before, each fiscal sustainability report started incorporating some of climate-related information in their long-term analysis for public finance, starting from 2021 with qualitative information. And from 2024, it started including quantitative information related to the impact of climate change on government revenues, expenditures, and budget balances, and debt ratio as well. And based on their modeling of the path toward net zero by 2050, they calculated what kind of impact going to be on their future revenues, government revenues and expenses, and you name it. So all of those information analysis is summarized in fiscal sustainability report, and now it becomes a part of mandatory disclosure about fiscal impact coming from climate changes. So this, and then why we choose country of Switzerland, because this is a case first related to the long-term fiscal sustainability information disclosed on a regular basis. And also case of Switzerland fiscal sustainability report is known as IPSASB RPG1 guided kind of reporting practice. But we choose country case for Switzerland for that purpose. Next slide, please. And the last country case is UK. United Kingdom is well known for its maturity in terms of sustainable reporting. For public sector sustainable reporting, UK's practice concentrated on the Green Government Commitment Annual Report. Its annual reports are published every year by Department of Environment, Food, and Rural Affairs since 2012. And it shows environmental performance of government-owned estate and operations. And in the report, departmental and partner organizations' actions to reduce environmental impact are disclosed. And framework development benefits. This framework development benefits from strong political support and pressure, also coming from the development in private sector sustainable reporting practices. Again, the country case of UK was selected because this is private sector driven kind of reporting practice for public sector, and also it has most experience and more in-depth kind of reporting practice was established for public sector entities as well. So these are 4 country cases we looked into, and this is why we decided to look into those 4 countries to learn more about voluntary practice of sustainable reporting in the public sector. Next slide, please. Dmitry, can you take it over from here?
Sure. Thank you, Sunjin. Great presentation. Thank you for sharing us the latest development in the international framework and also the country experiences we assessed during this work. Based on this, the results of this research we did, we tried to put together a series of implementations and recommendations that could be useful for countries to move forward with implementation of sustainability reporting in public sector. And we try to classify them in 3 big groups: the preparation, the transition, and the implementation or utilization. I will briefly walk you through all these items, because for sure they will be taken into consideration for the development of the readiness assessment on sustainability reporting. And let me start in the inverse order, just in this time. So we think that the last recommendation, ensuring the governmental commitment and the willingness to implement this change, probably should be the main important, the most important consideration and recommendations that we could make, because without the political support, not much could be done in terms of any reforms, including this one. The next step, for sure, should be the review of the existing regulatory framework and other relevant literature in terms of sustainability reporting in both private and public sector and in the implications. Based on that, it would be important to assess what are the existing sustainability-related regulations at the jurisdiction level. And they don't have to be necessarily the financial-related regulation. That could be climate-related, social-related, even governance-related regulations, looking at the sustainability reporting from a broader point of view, which includes the ESG approach, environment, social, and governance. The next set of steps, which are also very important, is to identify the institutions that should be involved in this reform and try to understand what are the regulatory changes that are required in order to move forward this reform. So one very practical step that could be done is conduct a stakeholder assessment at country or jurisdiction level, identify the key stakeholders that should be involved, and also identify the champion who would be taking lead on this reform. Probably the general consensus is that the Ministry of Finance should be should be taking the lead, but it's not the case of all the countries, and probably Ministry on the Environment on some countries might have departments working specifically on climate change aspects, could also have relevant work on this agenda. Related to that, and based on the stakeholders identified and the leadership, it would be important to come up with the adequate government arrangements, putting together what would be the decision-making authority, what would be the responsibility of each particular stakeholder. The definition of adoption and method, and maybe here we are jumping a little bit ahead of the train, but assuming that the country might take either of two approaches, direct or indirect implementation of the IPSAS SRS, that decision would be also critical for the further development of the reform. And for now, as you know, we expect to have approved the first IPSAS board SRS, but maybe in 5-10 years there will be many more standards. So this item would become particularly relevant. Something that we decided to propose as part of our approach is to conduct a pilot implementation of sustainability reporting in certain entities. Of course, this is not mandatory, it's optional, and probably it makes sense to do in larger countries where a big bank kind of approach is a little bit more challenging and risky. Of course, in smaller countries, maybe that approach is not even necessary, and the sustainability reporting could be implemented in the government as a whole. One concern that some colleagues have in terms of should we move forward with the sustainability reporting reform or not is what is going to happen with the IPSAS implementation reform, right? Or transition from cash to accrual accounting. And it's not necessarily a case of PULSAR countries, but if you go to other regions around the world, many countries are still struggling with the transition to accrual or modify accrual accounting basis and just starting with the IPSAS implementation, right? So working in parallel on two reforms may be a little bit challenging. So there should be some balance between both reforms. Outlining the key milestones in the timeline for the implementation of reform, of course, is a key. So implementation plan or implementation strategy, it's something that should be put together at some point during the preparation phase. And then we talk already about the commitment. The next two phases, the transition and the implementation phase. In the transition phase, we try to have the very close link with those recommendations proposed under the preparation phase to ensure the continuity. So in terms of the regulatory framework, that is the time when the framework should be revised or updated or developed a new framework that would be applicable for public sector. Something very critical to ensure that the required data is available and it could be collected, and that is and the data should be of good quality. This point is also related to the item 5 that has to do with the integrate of existing IT systems in order to be able to produce this good quality data. And it doesn't necessarily have to be the IFMIS, because everything we try to solve is the IFMIS, right? And we don't want to overload the existing integrated financial management information system. So it could be standalone system, it could be interface, it could be something that linked at the end to the general financial management information system. Reinforced commitment from the key stakeholders and of course the government as a whole is very important. Integrate the sustainability reporting with the government's financial statistics. Another key step. Define accountability assurance mechanism, and Sungjin just share with you what is going on in terms of the regulatory framework, and hopefully we have a more dedicated sustainability reporting assurance framework for the public sector. If the country decided to move forward with the pilot implementation approach, this would be the time to select the entities and get ready for the implementation. Change management, capacity building is applicable to any reform, including this one. So, of course, during the transition phase, the change management plan should be prepared and launched. Communication channels also connected to the change management strategy and plan. And, of course, secure effective monitoring and evaluation processing throughout the implementation process. In terms of the implementation, very briefly, just three steps for now is continue improving and evaluating the reform process, paying special attention to the bottlenecks in change management process, scale up pilot application, if that's the case, to the rest of the governmental entities, and ultimately use reporting outcomes for the decision making to improve not only the reform implementation, but also the quality of the ultimate information that will be produced through this reform. I will stop here. Thank you very much, and be open to any questions that you might have.
Thank you, Dmitry, and thank you, Zhang. So now we can move to the questions. So Ross, any questions to Ross or on sustainability side on IPSAS board project? Yes, there is a question, please. And then second one. Very good questions. Let's pick up one more and then we will react. Guys in there.
Yeah, my question is on the new sustainability reporting standard. To what extent do you think it will be a genuinely really challenging reform for the kind of countries which are in this room to implement? And if you were selling to them the reason why they should want to embark on that, like what are the decision-making benefits that you think they'll see from achieving it?
Thank you very much. So like all questions, and Ross, actually it's mainly to you, and probably you will elaborate why there was a split of the public policy side as a separate project and how you're going to address it. Thanks.
Yeah, so maybe I'll start with that and I'll work my way back. So the reason the board decided to split the standard from the proposed two perspectives in a single standard to two separate standards, excuse me, was simply because the feedback we received was people were getting very confused and finding it difficult to apply those two perspectives in a single standard. And many entities that were looking at the proposed guidance specifically were trying to think about how they might apply public policy programs to their operations, but they didn't have a policy setting role. So the easiest fix for that is simply to put them in separate standards and make it clear in the scoping of each standard the type of entity it would apply to. And maybe to George's question, before I move on to the first question, there's no doubt that it's difficult for countries that are currently transitioning to accrual to also think about how sustainability might fit into that reporting model. But I would say if you're going through a transition process and planning things like system changes, process changes, and really trying to come to grounds with financial sustainability, that's a really good time to think about the impact of climate. Because what we're seeing around the world is governments need to make significant investments to combat the impact of climate and climate risks. So it really is a financial sustainability consideration. So you really shouldn't think about that in isolation. And one of the benefits of our guidance, like the private sector guidance, is it is integrated into the financial reporting and financial thinking. So if you really want sustainability of finances, you can't ignore climate as an issue that needs to be managed. So we're really taking that decision-making approach. To the first gentleman's question about IPSAS 32 and the consultation, I would say your comments you shared right now are the perfect type of comments to provide to the consultation. So if that is a problem, IPSAS 32 in your jurisdiction or in the region where there are significant issues with the current standard, please let us know in the consultation, write us a letter and tell us the richness of the challenges you're facing, because that's a perfect potential project for a post-implementation review, which is a new formalized approach we've just finalized for future standard setting, where we might add a project such as that as a post-implementation review to take forward to update that standard to deal with problems in practice. The last thing I'll say on that particular point is if you're having challenges today, I highlight the IPSASB application group that I highlighted before. Again, if you go to our website, you give us the fact pattern, the challenges you're having, you'll get a response back from the team that's working on that specific guidance in real time, telling you what they think of your current issues. So is there a problem with the standard? Are you misinterpreting the guidance? Is it some other extraneous issue? No guarantee you'll get the answer you want, but you will get feedback directly from the technical team that's managing that process.
I wanted to briefly compliment Ross and maybe pass back the microphone to him. So in terms of the presentation of the sustainability reporting, sustainability reports, should they be done as part of the annual financial statements or separately? I understand that the general position of this is of the ISO's board that it should be standalone report. However, it could be included as an access or annex or as part of the annual public sector financial report, or it could be done completely separately presented as a separate report. Right, Ross?
You're right, Dimitri. And you're right, I missed that part of the question as well. So the board's tried to be as flexible as possible with the IPSASB SRS in terms of where that report can go. Taking into account that many will want it in an integrated annual report alongside financial statements. Some might do it separately. The one requirement that the IPSASB has, which is consistent with the private sector, is the timing of that report. So after the transition phase is over, because there is some transition relief around this, but after the transition phase is over, that sustainability report should come out with the same timing of the financial statement, so there isn't a time lag. And again, that's a really important aspect to highlight because of the integration between the information. So your financial statement should appropriately capture the financial impacts of the non-financial reporting in your sustainability report. So if you don't have the timing aligned, that could create a real problem in the mismatch between the information in your financial statements and IPSASB SRS 1.
Thank you very much, as we are good with on timing as well. Just to, on this topic, sustainability reporting standards, we are going to have, as discussed, we are going to have a separate session, or virtual at least, as soon as standard effective, and probably one of our next PULSAR event, we can also cover it in more, I mean, because there will be more questions coming of how to address, how to implement. And the guidance, which with KFIS, right, with the, we have developed, it was very, very relevant in terms of the just how countries are already going with the 3 phases on the planning. Very good. Those all the actions are very relevant for majority of our countries, and the transition phase and the utilization or implementation phase. Thank you very much for this good work. And on the sustainability side, there is another product which we are developing in one of our WorldBank projects, which is PEMPAL. Probably many of you have heard. We are developing a sustainability auditing guide for internal auditors jointly with CIGAR Network. This is going to be the first product globally available for internal auditors of how to approach sustainability auditing. And as we discussed actually 2 weeks ago in Moldova, there is no need for strong skills to start the audit or specific knowledge. So you can start the sustainability auditing and then try to move forward and implement. So these are the tools which will be available for our countries. Thank you very much. Now we're breaking for coffee break and we're coming back 3:30. Thank you. And thank you, of course, our online connectors, and thank you, Sunjin and Peter, for very useful and very productive contribution. Thanks a lot.
Thank you very much. Bye-bye.
Colleagues, this is the last session of the day, and this is the start of the education community of practice specific sessions. So the last few days, we have heard a lot about why consolidation is important, what levels of consolidation we need, whether SOEs, central government. But now we are going to dig deeper on what does this mean for the educational needs of the accountants and auditors. So we will have 2 education-focused sessions. The first one that we are having now, it's on how to integrate aggregation and ultimately consolidation topics into academic curricula and professional training programs. And also we will have one of the presentations is specifically on the user perspective. So we have Giovanna Davico, that's Dottora Giovanna Davico, senior researcher at National Statistical Institute, ISTAT from Italy. So this would be the user perspective from the government side on why this information is important and all the let's say, challenges that preparers and users are presented with. So this will be a new angle. And then we will hear from a university on how these topics of consolidation are integrated into curricula. From the PAO side, how are these topics integrated for the accountants that are receiving continuous professional development. And we will lead this session with Natalia Konovalenko, jointly with me, we are handling the education community of practice. So we will handle this this session. So without further ado, I will give the floor to Ian to start with the presentation. Then we go to Giuseppe and then to Shobana. So.
Thank you, Jose. So good afternoon, everyone. I think if Ross had the graveyard shift, then I don't know what this one is. But I've certainly had two very full days. And what I was planning to do was just make a few remarks, and then I'm going to hand over to my academic colleagues who've, one, not had the opportunity to speak to you yet, and two, will have some really hopefully useful examples to share. So I wanted to start off by trying to think about professional development, professional qualification as an ecosystem. So there are, and I've forgotten users in this diagram, so I already feel like I've made a mistake. But so the way that we think about this as a professional body is that we're aware that there are a number of stakeholders who have different needs, have developing needs, and these present, in some cases, complementing dynamics, but in some cases, they present some conflicting ones as well. And just to give an example of that, academic institutions, much like us as professional bodies, are trying to encourage people to study in their universities. We're encouraging people to try and join our profession. And one of the ways that we can approach that is by looking at how academic qualifications then feed into professional qualifications through exemptions and other mechanisms. We're also then aware that ministries of finance will have a key role to play in this space. We've talked a lot about standard setting responsibilities, but I think certainly we heard earlier on and in a number of times the need to think about both capacity and skills to deliver against those reforms. And so that then lends itself to thinking about individual government bodies, whether at a national or a subnational level, and whether, what do they need? And then I think individual practitioners and preparers themselves, and a big part of what we try to do as a professional body in the UK and increasingly globally is thinking about how do we identify and establish communities of practice, and particularly thinking about not just continued professional development linked to a professional qualification, but concepts such as lifelong learning, and also understanding now that careers maybe aren't linear and traditional in the way that they may have been once upon a time. And we've just had a session on sustainability reporting as an example, where there are new and emerging issues where people will want to retrain, reaccredit during a career. And how do we think about adapting both our qualification, but also the suite of products that sit around our qualification to meet those needs. So before I give some sort of a more specific example, I wanted to step right back. And apologies, this hasn't been translated because I provided it as a picture rather than as a diagram, but I don't want to dwell too long on it. What I wanted to think about is, so this is our professional qualification as it stands at the moment. And what I wanted to think about is the way that we teach people how to do public sector financial reporting. This is through a UK lens, although our international students are also on this scheme. And diving into that in a little bit more detail, there are three key modules in our professional qualification. So the first of those, and I am going to go back, is financial accounting, which is here at the very left-hand side. It's one of the things that our students do right at the very outset with us. And the financial accounting is some accounting theory. It's bookkeeping, so double entry bookkeeping, the basics of accounting, thinking about control techniques. But we do that within a context of preparing private sector financial statements. So at that entry level, that first point of engagement with our students, we're actually teaching them how to do double entry, but we're doing that in often we're using sole traders or SMEs as the examples that people are being taught in that space. We then move on. Later in the qualification, we have a module on business reporting, and this builds on the basic skills that we teach in the financial accounting module. But again, the focus there is on IFRS. So again, we're teaching people how to do the corporate financial reporting standards and continuing to build on that. And one of the things that's interesting is that when we look at exemptions, when we get people who have done an accounting or finance-based degree, we're able to offer quite a lot of exemptions into our qualification in those first two modules. And then I am going to go back, apologies for jumping around. The last module is on the right-hand side, so it's in our diploma end of the qualification, and that is the public sector financial reporting module. And this is whilst we'll have been talking about public sector in lots of the other modules, and we'll be building up to this is the first time we actually introduce those differences that applying those financial reporting requirements in a public sector setting. And I think, whilst it's understandable that that's the way we structure the learning journey, it is problematic because all of these people, as they are studying for their professional qualification, are also working in public sector bodies on a daily basis. And it's not until very late, relatively speaking, in their program with us that we maybe are giving them the information or giving them exposure to the things that would be most useful in their day-to-day work. And I think we've touched a number of times, actually, and I'm not going to dwell on this because it's one very busy, and I think these points have been made a number of times over the last 2 days. We do talk about, convergence and divergence, and when we're thinking about that through an education lens, it's a very important consideration. And I think it's true to say that, IPSAS is based on IFRS, but there are some differences. There are some important differences. And whilst they don't necessarily, when we're talking about broad brush approaches such as consolidation, they may be, they're not seen as significant or as material. But if you're a day-to-day preparer or practitioner, that might be that difference could be very significant to what you've been asked to do and the tasks that you have to complete. So one of the things that we're aware of is that we need to make sure that we're not just applying that kind of one-size-fits-all approach, just because this is the way that things have developed in the UK as a UK-based membership body, professional body. There are different approaches, and I just wanted to touch briefly on one of the examples we've done where we've worked in this region to maybe try and approach this question in a slightly different way. So we did a piece of work in Albania, which was supported by the WorldBank, and looking at, and this was touched on by the Deputy Minister in his remarks earlier today. It's really important at the outset of these journeys, and they are journeys. These are not things that get done or can be done overnight. They take long and sustained effort, but it's really important at the outset that you're thinking about the skills that you need and the skills that you will need as you go through that process. And capacity and capability is something which we see in all jurisdictions which we work in, including the UK, frankly. We've touched on WGA, the whole of government accounts process, and some of the challenges we've had there. Largely, that's been driven by a lack of capacity and capability, both on the preparer and the auditor side in local government. So these aren't problems these are problems that we're grappling with everywhere we work. What's great about this, as an example, is that we were led by the Ministry of Finance, supported by the World Bank. We were able to bring that ecosystem together in a much more intentional way. So things were, getting people around the table, actually thinking about how those needs translate and how those needs might manifest themselves in different environments. And what I really like about this is that we were able to work with both the local professional body in IKM, but also 2 of the local universities to actually think about how we can bring some of that public sector specific knowledge and understanding into educational programs earlier in the piece, so that people are learning what they need to learn to do their jobs earlier, and therefore hopefully being, having more fulfilled experiences in the workplace, but also more productive, more effective, more efficient for employers as well. So we think examples like this are great. We were able to use some of the tools that PULSAR that the World Bank have provided through the PULSAR program to do that. And we think it's a good example where maybe with the opportunity to have a slightly fresher look and a slightly blanker sheet of paper means that you can all think about these things in a way that maybe in some of the more established spaces in the world where we experience quite significant constraints. So I really wasn't going to say very much more than that. I just wanted to set the scene. Whilst I have got the mic, I wanted to just thank you for having me here for the last 2 days. It's been excellent. I've listened to the contributions with a huge amount of interest, and as I said, I will be taking home more than I brought. So thank you for your attention, and I hope you enjoy what's left of what's been an excellent few days.
Thank you very much, Ian. Now I will invite Giuseppe Grossi to walk us through the experience in Nord University on the incorporation of these topics.
Thank you so much, Jose. Thank you for the organizers, especially Arman Batian for the invitation, and of course, Natalia Konovalenko. I feel very honored to represent, let's say, a very large academic network called CIGAR, Comparative International Governmental Accounting Area. Very proud that CIGAR is represented today and also tomorrow with Professor Sandra Cohen, that she's our vice chair. And of course, I will bring an academic perspective and our experience in our Swedish university. And we were struggling in a business school to introduce public sector accounting. But as we struggle, we can also obtain these results that I will show you in a while. And I also wanted to bring some experience because we launched at the European Court of Auditors around 10 years ago in collaboration with my university, a master in public financial management that include also one module on public sector accounting. So let me say my university launched a master already some years ago on accounting and auditing for a sustainable business. And this is a master program that has a very nice international success because we are the first university in Sweden to be included in Prime, and we adopted SDG in all our programs, and we have an SDG section that is called Work Integrated Learning in each course. And now I will show you something, first of all, about the career opportunity. As you can see, we are not we are not working only on the private. I was struggling to put also the public in the arena. We are interested to, to work with the future CFO and also audit specialist and sustainability consultant. And we are also proud that our focus is not only on traditional financial accountability issues, but is also on non-financial accountability issues. And we put clearly this focus that decision-making, they should use financial as well as non-financial information. And as important target in our program, we have compliance with evolving standards. And this is important because our student in our master program, as I told you, they have always 1 week of work integrated learning, and they do this integrated learning in public as well as private company. I am very proud to be responsible of two courses, International Accounting and International Audit, but I will focus today only on international accounting briefly, and this is very connected and similar to what you are doing at CIPFA, because we have a focus on IFRS. So we have a module on private sector accounting, and we have consolidation done in a very practical way based on IFRS. But we have also a focus on IPSAS approach to consolidation. We have experience on whole of government accounting and also experience on single consolidated financial statement. We are aware that several European countries, they are adopting this IPSAS in different way, and we focus also on practice diversity in EU countries, because we know that some of these countries, they are adopting IPSAS in a slightly different way. And we know that IPSAS is also giving some flexibility. So this is more or less the structure of our courts, international accounting courts, but in the international audit courts, that is organized more or less with the same logic. We have also, as a topic, audit of consolidated financial statement, because let me say, this is a very relevant topic. Very quickly, the first part of the course is focused on the theory of consolidation, but we have also a focus on the standard of consolidation, and we do the international standards, and we highlight to the student also the differences between IPSAS and national standards. So in Sweden, we have national standard at central level, national standard at local level, and we highlight the similarities and differences between these standards. By the way, Sweden is compliant with IPSAS around more than 85%. Of course, we present international cases, and some years ago with Andreas Bergman and other colleagues, we made a comparison of of consolidated financial statement adoption in several OECD countries. And as you can see in my slide, we have two important experiences, the UK experience and also the Estonian experience, and they were already presented in this workshop. But let me say that we have also other European experience that can be significant. For example, in Sweden, the country where I'm living, we have consolidation at national level, we have a consolidation at the regional level as well as at the local level, but we don't have a whole of government accounting like in the UK. And this is visible from the Eurostat report that these three experience, Estonia, Slovakia, and the UK, they are the three most significant experience. This is the report of 2018, but I am sure that there are new countries that they are implemented consolidated financial statement in different ways. So we analyze country experience. We present cases. The UK case is quite well known, also with some problems like we were discussing with your colleague during the coffee break. But we are using also scientific article. And let me promote one very interesting article in PMM that is proposing a sort of historical overview, 10 years of consolidated account in the UK public sector. I invite you to read this article, because this article is not focused only on the opportunities, not only on the benefits of consolidation, but also on the technical difficulties over time. Let me mention also another country, because I feel very happy that Estonia was also part of this relevant PULSAR event. And I'm also proud that Estonia adopted already 20 years ago to consolidate their financial statement, IPSAS. And, you know, this is the collaboration academia with practitioner, and with one colleague at that time working in the Ministry of Finance in Estonia. We made another longitudinal study. And in this case, we were focusing on entrepreneurs. Who are institutional entrepreneurs? They are people like you, people that they are struggling to implement IPSAS, consolidated financial statement in a transitional economy. I invite you to have a look to this article, because Estonia is the case with more than 20 years of experience of consolidated financial statement in the public sector. And this experience was, in a way, successful thanks to the capacity of the institutional entrepreneurs with a private and accounting background, that they came back to Estonia in order to develop the country and also the accounting system. So more than 20 years of IPSAS adoption with some variation, with a shorter version of IPSAS. But anyway, they are adopting IPSAS and they have accrual accounting, accrual budgeting, and they are now one OECD country. Also thanks to this important innovation. The second part of my presentation is more practical. This is what we have done in collaboration with a network in Luxembourg. This is a master for public financial managers, European Commission, European Parliament, European Court of Auditor, European of Justice, Court of Justice, and also European investment banks. We have around 15, 20 experts each year, and I am responsible for Module 3, Public Sector Finance and Accounting. I just came back last night from Luxembourg. And let me say an important thing. I am very proud to be European citizen, very proud. And I'm very proud that the EU Commission adopted IPSAS in 2004. And as you can see, it's more than 20 years. EU is the first international organization to adopt IPSAS. And inside the EU world, you can understand that it's not easy to consolidate with the 7, 8 institutions, very large institutions already mentioned, more than 40 agencies that they are located in different countries around Europe. And what they have done, they adapted IPSAS to the EU context. And let me say that before adopting IPSAS, they adopted another method of consolidation. They were consolidating on the basis of the budgetary criterion, and they included before 2004, before the introduction of IPSAS, only the institution and the agencies depending by the EU budget. But one day, I still remember the chief financial officer, he was a British guy of the Directorate General Budget in Brussels. He said, we need to adopt general accepted accounting principle, and we need to recognize the work done by IPSASB. And from this moment, they adopted IPSAS and they created this global consolidation that I showed you before, combining budgetary criterion with the classical IPSAS criterion of control, so power and benefit condition, and they created in 2004 the first global consolidation. When I was in Brussels, I asked them, what's the usefulness of this consolidation? And this is an important topic why we should consolidate. And it was the reply of the Chief Financial Officer of the EU. He replied, thanks to the consolidation, we obliged all the EU agencies and EU institutions to use the same charter of accounts. So this is an important point because this morning it was one topic of one presenters. That's an important benefit. Brussels, European Commission, administrative unit of European Union, thanks to IPSA standard, thanks to harmonized chart of account, was able to control 45 agencies using different currency, operating in different countries. And also, this issue is highly connected to accountability and public trust. Because a lot of countries, they are Euro skeptical, because sometimes we had scandals in the EU agency, and after this important innovation, financial innovation, Brussels was able to control the agencies in a better way. And this is called accountability. When they talk about EU public value, they can disclose EU public value thanks to the consolidated financial statement. They are able to eliminate all the internal transaction between the institution and agency. This article was published in Abacus 15 years ago. I'm very proud that I can refer to this article and my co-author. You can find a little bit more about the technicalities and also the usefulness. Thank you again to PULSAR for the invitation. Only today I learned a lot. I'm very happy about this fruitful collaboration with WorldBank. I'm very happy to see also IPSASB representative and other colleagues. We should go on with this fruitful collaboration. And please come to CIGAR in Malta end of June, because you will see a lot of interaction between scholars and practitioners. And only with this interaction, we can introduce accounting changes. Thank you, my friend. Enjoy your time in Vienna.
Thank you very much, Giuseppe. So we're going to go to Giovanna for the last presentation of this session, and then we're going to go to facilitate questions and answers.
Thank you. And thank you for the invitation to speak to this event, which is really appreciated. My presentation, the title is Relevance and Usefulness of General Purpose Consolidated Financial Reporting. And why this title? Because relevance and usefulness is an area to focus on to frame why local government and COEs should be implement consolidated reporting. And this is given the diversity of the local government structure and of the COEs, which make things more difficult from one side. And on the other side, given the diversity of stakeholder needs. The focus is, of course, the accountability and decision-making framework, especially considering the process of externalization of public services, which led to reorganization of state-owned enterprises, and based on the need to contain public expenditure and to keep decentralized unit under control. However, the externalization of public services is often not fully captured in individual financial statement. So the main issue to discuss today is what are the main practical challenges and the main issue in applying CFRR at local government and the COEs level, and to what extent is CFRR relevant to the various user needs. within the local and the central government. So while there is a broad consensus in the academic literature about the CFRR role, relevance, use, and uses, both literature at both practitioner and academic level is conflicting when we address local government and COEs. And this requires, there is a gap on this that requires further investigation. We have learned in the previous presentation that the variety of country practices highlight that there is no one best way. I suggest that CFRR framework should be adapted to legal institutional context. So there are different issues to address, theoretical and technical. And the fifth issue is if CFRR can go beyond a mere compliance exercise to promote good governance, transparency, and informed decision-making. And this led to the question if CFRR is relevant for general purpose financial reporting or for specific purpose financial report. So what are the main challenges into the preparing consolidated accountant? First of all, we need to understand this issue of the process of externalization, which we say that is not fully included in individual financial statement. However, consolidated reporting can conceptually address this issue. So it is a solution on this lack of information, framed into the accountability and decision-making framework. We also identified some drivers in the experiences in development of consolidated accounts. And first of all, there is this issue to clarify the control across government levels, at central government level and at the local level. Then there is also the driver identified related to the parliament involvement in this process. And this is to be seen in connection with the desire for transparency and accountability in the provision of public services. And this specifically want to highlight the importance that both executive and parliament are involved in this process. Another driver identified is the accrual accounting that seems to have paved the way for publication of all government accounts. And the case support with the training. And training is intended at university level, at IT level, as well as the necessity of technical support and the guidance material. From IPSASB, we already have some modules for training. And from this module, we have, for example, a module that is covering IPSAS 34 to 38, which cover all the aspects of producing consolidated financial statement with a summary for each standard. And under this module, control is a key concept. And in training, it is very important that participants should understand this concept of the control. Another module included the IPSAS 40 for public sector combination, although this is advised to be implemented when you have already recognized all asset and liability, so it can be less immediately relevant. But with this module, one can apply the requirement for preparation and presentation of consolidated financial statement, understand the definition of control, and carry on consolidation procedure. In addition to that, also considering all the excellent contribution of the distinguished presenter of the previous day presentation, from which I learned a lot, I try to synthesize the aspect for an ideal training program. And the proposed learning objective here are the uses and the benefit of CFR, the key issue on the scope of consolidation, the particular issue which need to be faced for local government as a reporting entity. We need also to go in depth for the complex cases for CFR, and last but not least, the link to statistical reporting. All that should be accompanied by learning material, for example, with international, national, and regional standard, and including a numerical example to work on. Let's have an overview of this objective. We have learned that CFR can enhance transparency and strengthen accountability, enable assessment of government performance in the stewardship of resources. So in turn, this support fiscal reform, long-term planning, and coordination. This is, for example, the case of the country such as UK or Estonia, which have already developed the whole of government account. CFR also aids decision-making for internal manager, but also for external politician decision-making. But this provided that all the relevant control identity will be included from one side, and those that are not relevant will be excluded. This is an important point. In summary, CFR will create a single reference point for the government resources and obligation to assess this financial position and enabling this long-term comparison of aggregated. And this aspect led to the consideration that a central challenge is identify the reporting entity. So scope of consolidation is the first issue to address. We observed in the practice of a country that such scope of consolidation evolve from practical experience as it result applied in countries. In addition, this consolidation scope include in a variable way control identity. And also we have different materiality and comparability issue to address because of the different structure of the COEs. One important aspect is that consolidation boundary differ at legal, organizational, and budgetary level, and also for definition of control. We learned in experience that global comparability appears not to be the main goal of a CFR. Okay. And an important issue is that a central government or federal government can include consolidation in consolidation only central administration such as ministry and their agency, or also local entity. But this is connected to the notion of control and the interpretation of control. And here it comes to the question. Central government does not control some local entities. This is an aspect we need to answer in order to progress on consolidation. For local government as a reporting entity, I would like to just give a little bit the issue, an overview of the issue to identify local government as a reporting entity. First of all, its complexity is due to the process of decentralization, externalization, agencies, and the presence of a controlled entity, which have different financial dependencies. So there is a debate in academic and practitioner if we need to consider also a broader definition of control, for example, including financial dependence. And this considering that we have varying degree of financial dependence of local government on central government. And this led us to say CFRR must be purpose-driven. It is important to understand why and for whom the report is prepared. And last but not least is that one should ensure compatibility in accounting practice across entities in order to complete this exercise. One more thing that I would add here is also the issue of a lack of trained human resources, which is, of course, relevant to this session, and also the cost for preparing that they should maintain also the public accounting system. Here, I just made some example of the complexity of some cases for CFRR. This is, for example, a local government body, which is which has a number is a shareholder in a number of corporations, which may be private and public. Have also different structure, maybe totally public or mixed, and also are engaged in different public services. Municipality can have interest in pharmacy, in nursery, in schools, different public services, and putting all together should have a sense. Okay, and also we need to address the issue of the contractual relationship with entity when consolidate into local government. This is another case. This the university. This is a very debated case. It is relevant for country where the number of university is quite big. It's not just one or two universities. There is a debate that if universities should be consolidated and where, at the central level, the local level. This much depends on the interpretation we have of the area of competencies of university and also the financial dependence. Okay. And here it comes to the difference with the statistical reporting. There are differences, first of all, in terms of boundary of reporting, because there is the approach of the IPSASB, which report either on a compulsory or voluntary way, while, for example, in Europe, ISA, that is the System of National Account, is a requirement for classification of each resident institutional unit to a sector of general government into the statistical reporting. In addition, under ISA, we have central government as a single unit. while this may not be the case under IPSAS. And some COEs are excluded from IPSAS when make this scope of reporting, but are consolidated when controlled. On this, we have a different approach because, for example, COEs on a non-market basis are consolidated with the unit which control them in the general government sector. And when we go to the public sector, we add to the general government sector the market public corporation. So there are a number of differences about this boundary, which need to be assessed in training for preparers, but also for users. And here we have some experiences for the issue of alignment. There are some countries, such as UK, where, with adoption of IFRS, have been provided an alignment of accounting practice across government, but even more, producing the whole of government financial statement, have been produced a number of reconciliation also with the national accounts in terms of boundary, in terms of some aggregate, for example, for debt. We start from debt in WGA, and we reach the debt in national account. And this is particularly important when you look at aggregate, because different aggregate numbers can confuse users. Okay. So the point to learn in training is this issue of alignment with the statistical reporting, which can affect the development of WGA. And to understand this different approach of the statistics, which is aggregation according institutional unit, which goes aggregate into the institutional sector, of which we have a general government sector, versus IPSAS, which is based on the notion of control, which is power, benefit, a link between power and benefit. Okay? So an important message here is that the reporting entity has to establish a purpose for consolidation and consolidate accordingly. So it will depend on the users, but reconciliation between the two reporting systems in statistics and in public accounting is necessary, because otherwise user will be confused. Here, just very quickly, I also had an idea to distinguish academic and professional training. While academic may more focus on theoretical understanding of the standard and the knowledge of the framework, as well as to develop critical skill in order to understand, the issue. On professional training focus, one may better, focus on exercise, case study, scenario, and in the area of digital transformation, not only this, but also the automation, the tools offered by digitalization for data governance and management. So just the closing reflection is that according all these, issue and theoretical aspect, it appears that the CFR may serve specific purposes, is not universally relevant. So it is very important to understand its uses and benefit. And in training, one should consider the control and consolidation methods, the different consolidation criteria, such as also budgetary control, and the link to statistical reporting. So thank you very much for your attention. Once again.
So now I will invite Natalia to spark the conversation with a set of questions, and then we will open the floor for questions from the audience. Natalia.
Thank you very much, Jose. Thank you, colleagues, for a very interesting presentation. And again, as usually in our EDUCOP sessions, we have professional accountancy organizations and university. So I invite you, and focus of today's session was on consolidation and how it is incorporated into curricula of both professional PAOs and universities. So I invite you to ask your questions, please, to our presenters. We have 30 minutes. And Mike.
Thank you. Is it working? Okay, thank you very much for a very interesting and useful presentation. So we have researchers and professors now from Italy, Sweden, Norway. That's why I'm trying to ask questions. Maybe it will be very short, but 3 main questions. It's very interesting. First of all, I would like to know about your experience in preparation of trainers for sustainable reporting. Nowadays, it's very, very important. Do you have any such special programs for TOT, training of trainers, or do you just invite trainers from abroad, etc.? And how do you prepare materials for such kind of subjects? Second one, I'd like to know about your ideas about what do you think, how to include AI into training materials in Sweden, in Italy, in Norway. And the third, very short question, does your universities have cooperation with the PAOs? And if so, do you have exemptions from PAOs co-location scheme? Thank you.
You know, your question is really focused on sustainability accounting. I see more and more that we have courses on sustainability accounting. Also in my presentation, after international audit, we included one specific course on sustainability accounting and reporting. We are very happy that this topic is quite developed in Nordic countries, but I know that also Italian colleagues and also Southern European colleagues, they teach sustainability accounting and reporting. We are very lucky in Nordic countries that Sweden was one of the guiding country for United Nations SDG. And as I mentioned you before, in each course, management control, accounting, auditing, we do 1 week of work, integrated learning with SDG. So that's an important point because students, they should go within companies that they have a focus on SDG. Regarding the second question, related to artificial intelligence. Personally, as a scholar, researchers, author, editors, reviewer, I am very skeptical in the abuse of artificial intelligence. And we have some guidelines from our publisher, how to recognize, how to avoid artificial intelligence in research. But regarding teaching, we are in a way in favor of using artificial intelligence, but in order to evaluate courses, we are also very prudent in exams because sometimes students, they are replying only using artificial intelligence. So that's why we are going back to the past and try to have oral exam in order to avoid this fake examination. We are all wasting time if they use artificial intelligence. And the last question was about, I didn't understand very well, the collaboration with PULSAR. Sorry.
The cooperation between universities and accounting organization, professional accounting organization. Do you have such cooperation, or does it include exemption for co-location scheme or program, etc.?
Yes, we have in Nordic countries, let me say Sweden and Norway. I left Italy already a long time ago. I don't know what they are doing on this issue. Our program that I showed you before, but we have at Nord University in Norway a similar program. We are certified and in the certification by international institution. And in this certification, we are helped also by the National Certified Public Accountant. So that's an important point. We are involving them in any changes of our curriculum. So not only private certified public accountant, but also public auditors and public accountant association. We have a national association of public accountant in Sweden, and we are appointing one member. We are requiring one member for our certification. Sorry for monopolizing the reply.
Can I just add on sustainability and use of artificial intelligence from a PAO perspective? So we've just spent time revisiting our competency framework for our both for the professional qualification, but also from a continued professional development perspective. And increasingly, we're thinking about technical competencies. And I think sustainability reporting is one of the things that would fall into a technical competency. So, and we are building that into our qualification and also other products. So, for example, we have a joint certificate, which we do with one of our other bodies in the UK on sustainability reporting. But what we're also doing is, again, and I think what Giuseppe's just said is interesting, we're also going back to the past. So we're going back to, well, what's at the core of being a professional? And that's actually about professional values and attitudes and actually having intellectual curiosity. So as well as those technical competencies, we're also building out some of those relational skills, and we include kind of the use of AI in within that. So if you're using artificial intelligence as a tool, it's inevitable that it's used in a professional environment. We need to reflect that in what we teach and what we accredit, because we have to be relevant to the profession that we're serving. But in using that tool, are you using that in, within the constructs of those ethical values, those moral considerations, those professional considerations? So we're kind of going back to the past and just making sure that we're clear about what it means to be a finance professional when you're using those tools. So not to discourage their use, but to make sure that their use is appropriate, I suppose, is the challenge as we see it.
Yes. Can you hear me? Yeah. On the part of artificial intelligence, just quickly, in my heart of a statistician, I want to say that it may offer some help if you understand the capability of this technique and drive according to your needs. For example, text mining or machine learning can be used for text coding. And this can help even in consolidation, because when you should do a number of intra-group elimination of a transaction, you need symmetry and you need to identify them. And this can help in, speed of the work. So of course, artificial intelligence should be taken with some prudence, but when it can help. We already experimented in a number of areas. For example, in business register, we are doing a lot of work to develop an algorithm to classification of unit, also to get data from administrative data and coding them to the appropriate sector. it's an area to develop. It's not yet, but it has some, experience already offered, and may be helpful if you, can use it properly. Thank you.
Thank you.
Sorry, I should say, so actually something that Giovanni's just said has prompted another thought. So one of the other challenges that we're grappling with is, so a lot of what we would describe as entry-level roles. So there are things that will be done either by artificial intelligence or by automation or machine learning or whatever it might be that traditionally will have been done by a more junior member of staff who is maybe at the start of their professional qualification or the start of their career. And it poses a challenge to, we have to think about how we teach those people what good looks like, so that when they're in those senior roles, they've got, even if they haven't got the experience of having done those things themselves, they can appropriately challenge the output from those processes. So it's very exciting, but it does pose a whole load of questions which we're grappling with as a profession at the moment about effectively how do we rethink some of those traditional pathways into becoming a finance professional and an accountant.
Thank you very much. Yes. Questions?
Thank you. My question would be for Professor Grossi, but it could apply to CIPFA as well. I was wondering, would you have a general profile of your students at the Master of Accounting, Finance, Sustainable Business, or let's say, do you have any data about their employability prospect? How many of them do end up working at the business and the public sector, or is it more the private sector that they would choose?
We are very attractive because Sweden represent, Greta Thunberg, and Swedish government was strongly supporting SDG. So we have a brand on SDG that is starting from the central, regional, local level, a university level. So I think that we are selling this brand, especially in emerging economies. So I have students already working as auditor, already working as CFO, that they want to have a specific master with a focus on sustainability accounting and sustainability auditing. So in class, we have already people with basic accounting experience. But when I made my degree in accounting long time ago, 95, we were studying only private sector accounting. Today, they are coming to study public sector accounting, public sector auditing, sustainability accounting, sustainability audit. And that's an important point. Sustainability audit is also the new frontier that public as well as private sector auditor, they should acquire. So in terms of employability, the majority of them, they are already employed, and especially from emerging economies, but the Swedish Nordic student, thanks to the master, they can have a good work in, let's say, the Big Four or any region, municipality, or also some authority, national agency. So for accountant, auditor, I don't see a big problem of placement, really. But our brand, once again, is sustainability accounting and sustainability auditing.
Thank you. Thank you.
So in terms of the profile of our trainees, our students, almost the vast majority of people who are on our professional qualification are being supported by an employer, so they're already in employment. I think what I would say though is, and I think it's the point about is a professional qualification. So sometimes a professional qualification won't be the right answer. So increasingly we're looking at maybe foundational qualifications or staggering that journey to a full professional qualification so that it's more manageable and it can be fit around the needs of an employer and people's busy lives. The other thing that we see increasingly important is that concept of lifelong learning, so that you might train as an accountant, but you then might find yourself in a role where you suddenly need to grapple with sustainability reporting. You might qualify as an auditor, but then you've got to assure a sustainability report. So how do we equip people both with the mindset, but also the materials and the accreditation to allow people to transition through different phases of a career and feel supported by us as their professional body?
And two questions. It's from Ukraine. I am also professor of university, and very close these problems for us. It's for EU university too. Please explain how you understand, what does it mean, sustainability accounting? What is the subject? What is the objectives? What does it mean? The accountant should know how to calculate some indexes or some other, please, this one. And next one, do you have experience using of artificial intelligence for developing of your master program and for provision of interconnections between some competencies and also learning outcomes for this program? Thank you.
Thank you for question from Ukraine is always welcome. Let me say that we have a syllabus for this course. I will share with you. We will exchange our email address later on, but I think that I show my email address. We can keep in touch. Essentially, the student with 6 credits is the course. In 5 intensive weeks, they are studying some theoretical elements of sustainability accounting and sustainability reporting, the basic theories like stakeholder theory, legitimacy theory, and so on. And after they move to the standards, and we know that there is a huge complexity of the standard because we have a lot of competing standards on sustainability. But I am very lucky because my colleague, that she's responsible of this course, Caroline Agestam-Pontopiden, she has recently published a very nice book on sustainability accounting. It's a good promotion for her. I can send you the link. And it's full of experience. And I was stressing her quite a lot. Please include a chapter, at least one chapter, otherwise I will not adopt the book on public sector sustainability accounting and reporting. Plus, we are adding also case studies. Of course, successful case studies of sustainability from the UK, from Sweden, as well as other countries. And I think that the previous report of PULSAR presenting this before by Dimitri in collaboration with Andrea's team can be also a good source of successful case studies. Regarding the last question on artificial intelligence in designing our master, I think that our master was designed with our human intelligence, only human intelligence, and we put all the teachers around the table, I remember, and we made a revision of our master, and we put it sustainability central, and we put also public sector central. Otherwise, they couldn't put my name on the program.
So I think I won't talk about AI, but on sustainability reporting, we tried to break it down to, again, we go backwards to go forwards. So we think about the things that accountants have been doing for millennia in terms of pulling together, collecting information, making sure that information is well controlled, the source of it can be assured, and then it can be reported. And I think it's those skills that accountants have that are really, really important in this space. So whether it might be different subject matters, and I think sustainability reporting is something where we'll see multidisciplinary approaches, but we have that in accounting already. When we're valuing assets, we rely on other professionals to provide us with some of the information to allow us to make those judgments. And sustainability reporting will be the same. So I think it's about reflecting on what we have to bring to the party rather than worrying that we're trying to the ground that we're treading is new ground. So that's the way we've tried to break it down. It's going back to those core skills that as a trained accountant you have and you understand.
Like to add something now? Yeah, thank you very much. Colleagues, I have a question to our panelists as well, if I may. We heard during these 2 days and also during previous events that there is a significant lack and huge demand for accountants in public sector. At least this demand exists in PULSAR countries for sure. And I have a questions. First of all, maybe to universities. Maybe this is the lack because of the lack of interest on students' side to this program, specific programs for public sector accounting. And I would like to ask, what is the situations in your countries and in Italy? And I think, Giuseppe, you can respond for Sweden and Norway as well. And if there is an issue, how is it addressed? If there is a gap between demand and supply of public sector accounts?
Ladies first.
Oh, okay. Yeah, regarding public accounting, actually Italy is going under a reform of full accrual accounting. And the minister has just released all the suite of standard and also offered the training program on the standard. Now it's the time of implementation. And so with this training program on the reform specialized on the standard, which are called ITAS, Italian Accounting Standard, participant can get a sort of a qualification of ITAS, no? on ITAS, on public accounting under ITAS. And this is, I think, the start, of the part to develop a system to implement the reform. Because, of course, once you have done a reform, you have to implement. And this is the part more tricky, because there can be a number of issues which you don't have, take into account when develop the standard. However, the standard there, and then you should develop everything according to the standard in principle. So this will be at the ministry, that is the authority for public accounting in our country. But of course, I expect also that the professional association will follow, in the future time with this program at professional level. And they already started to do something. Also because in the governance, there were some chartered accountants already involved. So I expect that this will be spread in Italy on accrual accounting. That is. I think Giuseppe can give you more insight on this, but my experience is that in the university there are not that much courses tailored on public sector. There have been in the past some effort to introduce this, but there were not much, interest from students. And this, I think, it's more for professional, after the university. But this, I think, is a gap, because you should start from the beginning to think about the knowledge of the public sector, not when you already work in the public sector. You should be prepared, okay? So thank you.
Your question is not easy because, Nordic countries, they are quite different. If we consider Norway, Sweden, Finland, and also Denmark in this issue. In general, in the Nordic business school, there was no focus on public sector accounting, with some exception. Let me say, Gothenburg, Olof Olsson, already in the 90s, he was teaching public sector accounting, but it was more an exception. Nowadays, as I know, in several business schools, Stockholm, Gothenburg, our business school, also in Lund, they included a specific module, as I show you. And this is important because our future accountant, future auditor, in such countries, they have public sector not only as employer, but also as client. If they are working for Big Four, PwC, Ernst & Young, they have always the public sector as client. So let me point out, in the structure of our master program, we have strategy and management control. This is our second course. And the foundation of public sector accounting is budgeting. So the student, they should know how a budget is compiled in a private legal form and also in the public sector. And this is another important point. They cannot understand budget reporting if they don't know how the budget is compiled. And regarding Italy, I think, because I was there until 2010, in several universities, they have a course on public sector accounting, sometimes in the bachelor, sometimes in the master. And there are also specific master programs only on public financial management. So where they can study different part, they can study budgeting, management control system, financial reporting, non-financial reporting, and so on. And these are specific postgraduate program, especially done for civil servant that they don't have enough accounting knowledge and they want to improve their own accounting knowledge.
So I'll be very brief because I'm conscious of time. So yes, I think there is a real challenge to encourage people into the profession. I think there are so many things that people can be today that they couldn't have been 10 years ago. And I think that's I think that's true for all professional bodies. And we certainly see that, I think, across the PAOs in the UK. I suppose then within that public sector is a specialism within a specialism, and so there's always that challenge that we're up against. One of the ways we try to address that is by, we talk about putting the public, so we don't necessarily focus on the accounting bit, we talk about the public finance bit. So actually we've talked a lot the last 2 days about some really technical things in terms of consolidation and and the how. What we don't also try to focus on is the why, because if you're working in public finance, actually there is a vocational element to that. We hope that people want to make a difference to the place that they live, the communities that they serve. And we think that's something that's really special about working in public finance. So yeah, we talk about putting the public finance back in CIPFA, and try and focus on telling some of those stories as well as the sort of the technical elements of what the role entails.
Thank you very much, Ian, Giuseppe, Giovanna, Natalia. This has been a very interesting discussion. Thanks to also our audience for the very interesting questions. And I would like to ask for a round of applause of our panel and to close the session. Thank you very much.